Bloomberg's learned that Hershey is taking an unusual step. It's directly sourcing a large amount of cocoa through the ICE Futures US exchange instead of buying beans in the physical market. Hershey saved millions in that deal, but it sent December delivery futures to a record premium over the next contract. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We've been shouting from the rooftops for a very long time. There is a monopoly problem in this country, and in particular, there's a Google problem in this country.
This new law that came down from China's National People's Congress Committee ended up leading to the disqualification of 4 pro-democracy lawmakers.
This is probably the very final and complete crackdown.
I hope you understand it is not anything new at all. This was supposed to happen.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I was a bit surprised, and I have to say that right after that announcement, the Federal Reserve Board came out with a statement expressing their interest in extending them to keep them available, and that's pretty much where I am.
Raphael Bostic, the Atlanta Fed president, on the little bit of tension we wake up to this Friday morning between the Treasury and the Federal Reserve over some of their emergency programs set to expire year-end. The Federal Reserve would like to extend them. The Treasury, Secretary Mnuchin, would like to use the money elsewhere. From London and New York this morning, good morning. Let's get you some price action. A quiet morning. I have to say, a quiet week in the grand scheme of things. We're unchanged on the S&P coming into Friday. We're down 2 points in the here and now. In the FX market, euro-dollar 118.64. Just a little bit of a softer euro here, down 0.1%. And in the bond market, not much to talk about here, Tom. 83 basis points on the session. We are unchanged on the morning.
We at Bloomberg, and this is one of the great tools that John Lisa and I use every day, folks, is our headline service. This was invented 30 years ago. It's absolutely definitive. We have in the screens in front of us a global first-order condition headline dump. And the latest headline I have on Michigan and the president is the Michigan Secretary of State. Lawmakers haven't confirmed their meeting with the president today. I'm not really sure what the actual fact is, but that's the latest headline I have, away from expected last evening as well. Julie Norman is at University College of London, and of course she has studied the academic tumult of our political system. Julie, it goes back to 1876. Rutherford B. Hayes, a completely different election. Michael Beschloss was heated last night that there's not a comparison to 1876. What is the comparison you see now as this president speaks to state legislators and to election officials?
Well, Tom, I think it's pretty unprecedented, obviously, in any recent times. And as you noted, pretty far back in history is the latest we've seen anything like this. And this so far is just an invitation. As you said, we haven't heard of a confirmed meeting yet. But the fact that the president is reaching out, putting pressure on state legislators, presumably to have sway over the pick of electors, maybe contrary to the popular vote, would be something just unprecedented, and I think would spark uproar that we have not seen yet. I think the public has pretty much held it together, but that really would be a tipping point.
Julie, we are honored at Bloomberg to have a legal team that's outstanding. Noah Feldman, folks, of Harvard Publishing yesterday on another election matter. Julie, do you see that the judiciary system intrudes into this action and process of the president, or are they really removed from this specific discussion?
Right now, I think we see that the judiciary has been pretty removed. We've seen that nearly all of the attempts to push this election into the judiciary system have not gone anywhere. The courts have maintained their integrity and pushed back at most of the lawsuits that had no substantiation behind them. And we obviously don't see anything taking root even at the state level that would push things up to the Supreme Court. So right now, I think we see the judiciary staying pretty independent, and rightly so.
Professor, do you have a deadline in mind when this just stops? Now, politically speaking, they could carry on with these theories for a long, long time. But in your mind, just in terms of approaching January 20th, what's the deadline to actually go through the procedure, the process of taking this through the courts?
Well, I think that we'll see going into December 14th when the electors actually need to cast their ballots. And if those ballots are cast in a way that aligns with the popular votes, I, again, don't see the courts necessarily getting involved in any way. If at that point there's still questions, challenges, lack of decisions among the states, that's the point that I think there would be any kind of judiciary intervention. But I think that's quite unlikely at this point. We see Trump doing a lot of what he's doing to delay the process, to cast doubt on the legitimacy, but to actually move it into the courts with any kind of meaningful outcome would still be quite a long shot.
Julie, there's been silence by a lot of Republican leaders, by almost all of them, with a couple of exceptions. And I'm wondering what this means for the Republican domain going forward. I mean, does this mean that there's going to be an adherence to a Trumpism well beyond the Trump presidency?
Well, it certainly looks that way, doesn't it? I mean, right now what we've seen is that the Republican officials who have spoken out against Trump have been mostly those in non-elected positions. And nearly all officials in elected positions seem quite concerned still about not alienating Trump as a person, but moreover Trump voters, and recognizing that there's still a lot of support for his messaging among the GOP, and that's just not a risk they're willing to take just yet.
Julie, what are you going to study this weekend? I mean, seriously here, with all this uproar and turmoil, you're the pro here. What are you going to focus on this weekend?
Well, I'll tell you what I'm actually looking at, Tom. A lot of my work takes place overseas and in places like the Middle East and deeply divided societies. And me and some of my colleagues right now are trying to understand what drives divisions in some of those places and what we can apply from those to the United States right now, and also what prevents conflict in those places and might prevent conflict and smooth this transition in the U.S. right now.
Julie, that's quite a comparison. Before we let you go, is that just hyperbole, or do you actually think that's a comparison worth pursuing?
Oh, I definitely wouldn't say the cases are a direct comparison, but more that what we look at in terms of indicators for deepening othering, aversion to other political parties, senses of moral differences, all these are things that over the long term just create societal divisions, and those are trends that we're seeing in the U.S. right now. I definitely do not take an alarmist approach. I don't see the U.S. descending into violence, but I do see these deepening social divisions that are a bit reflective of some other places where I've worked, and I think a lot of people in the U.S. are concerned about that right now.
Do you see that in other Western democracies as well?
We do. I mean, right now, even in the UK, in Europe, there's some of that. I would say the U.S., though, really is at a different point. I think a lot of the populist messaging throughout Europe has embedded that a little bit, but more in the continent than the UK. But the U.S., we do seem to see a different kind of just a division between kind of two different kinds of America that are not really that far apart on a lot of issues, but seem to just have these social divisions that are becoming deeper rather than bridged.
A conversation we'd love to continue another time. Julie, thanks for your time today. Julie Norman there, University College of London professor on the divisions in the United States of America that have been evident for a long, long time. But once again, Tom Keene, back to the surface and focused on in a big way.
Yeah, she said that with great humility. And, of course, she's got to be careful what she says. John, all it comes down to is, are we becoming like, say, Sudan or, you know, pick 7 other countries that are third world.
Which is ridiculous.
Upward.
And
ridiculous.
I don't think she's suggesting that.
And that's not what
come on, that's what she's saying.
No, she was saying what lessons can be drawn from that. That can be
I agree. I'm the one doing the hyperbole here. I get that. She's being responsible.
I get
I'm
that
not.
too.
I get it. Lisa doesn't get it. But the point, you know, come on. But the issue here is, you look at the newspapers, the Bloomberg.com, and it's original in America right now. That is a fact.
Torsten Slok's up next. I wonder what he's got to say on that, or rather, what he hasn't got to say on that. Apollo Management Chief Economist in a new seat. Conversation's going to be very similar. Looking forward to having that conversation with him. From London and New York this morning, good morning to you all. This Friday morning, equities declined 0.1%. This is Bloomberg.
Well, the main instruments on board include a dual frequency radar altimeter, and this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements we can actually have the superb measurements that we expect of sea level rise, but also the waves, the significant wave height, which is the top 1/3 of the waves if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
From London and New York this morning, good morning. This is Bloomberg Surveillance, and here is the price action this Friday morning. I have to say the news flow really impressive. The price action, it's a bit of a snoozer this morning. The S&P 500 down about 0.1%. The Nasdaq just a little bit firmer. The Russell a little bit softer. The division between the two, I know that's where the story's been. We've been talking about it repeatedly over the last week. Over the last month, the Nasdaq up about 8%. You've had double the return on the small caps, on the Russell. This morning, the small caps just a little softer, down 0.2%. Switch up the board. I'll finish on the bond market quickly. Small caps, the cyclicals, they've done nicely over the last couple of weeks. The bond market's not come along for the ride. We've talked about that many times this week. I think it's worth repeating. The spread between 2s and 10s, about 67 basis points when we woke up 2 Mondays ago before the vaccine news. That's basically exactly where we are right now. 10s at 83 basis points, 30s at 154. And Tom Keene, you might have had the cyclical move, that rotation into cyclical equities, the banks. You just haven't had the move in the bond market in quite the same way. And I know we keep talking about it, but it's worth repeating. If you want that trade to work, do you need this bond market to come with it?
Need is to have the real yield come with us as we move to one of John's properties here this afternoon. The real yield, the 10-year real yield, negative 0.8750%, and that's a greater negative real yield through the week in a churn. I don't want to make too much of that, but it's worth noting here as we go to Pharaoh's property this afternoon. Here's the way it works. Scott Kleinman and Jim Zeltner at Apollo Management, in a weak moment, took one of the best economists in the street and dragged him over into the dark side of asset management economic analysis. They stole Torsten Slok from Deutsche Bank. Huge loss for Peter Hooper and their team, and we're thrilled that Mr. Slok could join us this morning. Torsten, a global Wall Street question. How's it different being an economist for a massive global bank versus being an economist for asset managers?
Well, the data and the analysis is really literally identical. I mean, trying to think about what markets are doing and where they're going, the analysis ends up being exactly 100% the same. So in that sense, the job that we all have of trying to think about where is the economy going and where are financial markets going is the same for all of us.
You're at a cross-section at a very interesting time, though. We have Dallas Fed President Robert Kaplan coming out saying that he could expect a contraction even in Q4 as a result of the worsening pandemic. And then you have Jim Paulson of Luthold, who just came on and says that he expects a 5% expansion in Q4, this sort of bullish attitude in markets versus the bearishness of economists. Where do you come out in this divide that seems to be growing?
Yeah, what is very important to watch is the high frequency data, and jobless claims yesterday, as you also talked about, of course, was going up. That means that more people are becoming unemployed. This is a yellow light for risky assets. I mean, there's something here that's going on in the economic data where the nightmare scenario for markets would be if the unemployment rate in November will begin to go higher. I mean, we are still waiting for the vaccine. There is still some time before the vaccine comes. We have now more conversations about whether we need a second generation of a vaccine. There's a lot of still question marks around how the vaccine will be both deployed and how it will function, etc. But the short answer to your question, Lisa, is that in the short term, it's very different from, as a forecaster, the way it normally is. Normally, you have a lot of certainty about the short term and not much certainty about the long term. But here it's the complete opposite. We have a much better idea about what things will look like in 2021 than what we have in the next 2 months.
Torsten, I really underestimated the resilience of the US economy and how quickly it would bounce back, and many other people did as well. Are we repeating that again as we work our way through winter?
So it is the case that the US economy is more resilient than any other economy in the world. We have much more dynamic labor markets, product markets. We have more competition across all markets than literally any other country in the world. So in that sense, the dynamism of the US economy is not being impacted, at least not dramatically at the moment. That being said, the cyclical movements around that structural issue continue to be a risk here in the short term. And that's why some of the high frequency indicators, both of mobility, have started to go down. Also open table restaurant bookings have also started to go down. We have some rollovers. Even New York City transit MTA data has also started to show some more weakness in the last few weeks. So we're a little bit worried about where the high frequency data is taking us at the moment.
Well, let's talk about the policy composition, the policy prescription. Often on programs like this, you talk about speed and size. We talked about that with Jared Bernstein earlier this morning. Let's talk about composition, where you would target the stimulus right now, Torsten. Where does it need to go?
I think it is highly unusual, as you also just spoke about a little while ago. It's highly unusual that you have the Federal Reserve and the central bank asking fiscal policy for aggressive action. I mean, as you all know, I used to work at the IMF, and there the main lesson is that the central bank should be telling politicians to spend less money. Now you both have in Europe and in the US, the central bankers almost asking and pleading politicians to spend more money. Please increase government expenditures. Please cut taxes. That is just a really unusual signal and tells you how significant the message is from the Federal Reserve at the moment in telling that we do need some more support. And it comes really from the fact that we're still 10 million jobs below today where we were in February. So in that sense, the hole in the economy is still pretty deep, and that's why the need for fiscal expansion and the call from the Federal Reserve is so significant.
Torsten, to your claim charts, what has moved is service sector inflation has become service sector disinflation. What are you advising Apollo management? Does it sustain here? Does it become more disinflationary, or do we just assume a reversion to that 3% level on the great service sector question?
Yeah, this is a really important point, Tom, because the shock to the economy with this pandemic came to the service sector. It was restaurants, it was retail, and therefore we saw significant declines in prices and significant declines in employment in the service sector. That's now rebounding, so that's why we're seeing a reversal of that. But historically, over the last 20 years, remember, if you separate CPI into goods inflation, has basically been zero for the last 20 years. All the inflation that we have seen and most of the variation inflation has come from the service sector. That's why the unusual situation here with the service sector being a driver of inflation, first to the downside, now to the upside, is something that is very important for the inflation outlook overall, that we have had this compositional shift where the service sector suddenly is playing a more cyclical role relative to the goods sector.
So are you framing the American economy as a return to previous trend, or are we establishing a new level of trend that will be a lesser level?
So in trillions of dollars, we're still 1.3 trillion in, at least in Q3, in terms of how far away we are from getting back to the trend that we had pre-pandemic. If you want to fill up completely the hole that has been created in the last 2-3 quarters, then we need something more like 4 trillion. This gives you some idea about what is the magnitude of fiscal need, if you will. And the question exactly is, as you're asking, well, do we want to get just back up to the trend line, or do we want to fill up the hole completely? In other words, how quickly do we want to get the unemployment rate to come back to the 3.5% that we had in February? So in that sense, all this will depend, of course, on the speed of when the vaccine will come back. But it also will depend on this issue that we also are talking about all the time, if we will get another fiscal stimulus or not here, either before the end of this year or sometime in the beginning of the new year.
Of course, as we try to plug this hole by borrowing money, there is a question of that overhang of debt, the unbelievable expansion of debt globally over the past 9 months in order to plug this hole, what that will do to growth going forward. And I'm just thinking about our conversation about zombie companies. not that long ago, 20% of the large U.S. companies considered zombies. What does that do to long-term growth in the United States? Do you think it's adequately priced in?
So the BIS has done a lot of work on this, and what they have repeatedly said now for several years actually is that if we have a bigger share of companies that ultimately are more unproductive and are using resources, using capex, using workers, then you do run the risk that that begins to have some macroeconomic implications. And on top of that comes also the other issue to your question, Lisa, that if you do have such a significant increase in the amount of U.S. treasuries outstanding, what should you then be watching? You should be watching for risks of potentially talking about downgrades to the sovereign of the U.S. Fitch already has U.S. sovereign on negative watch. You should also be looking at treasury auctions for what is the bid to cover ratio doing. You should also be looking more broadly for demand and supply in the treasury market. So far, everything is fine, but it's pretty clear that when you think about the very significant actions from the Federal Reserve, there is some very important questions about demand and supply in treasuries that we all need to think about also over the coming months.
Torsten, what are you optimistic about next year?
So I am optimistic about the vaccine, and I do think it will work. But this very unusual situation where there's more clarity about 2021 than there is about the rest of 2020, that is really making it very difficult when you sit with your spreadsheet and try to put together your forecast for the global economy. It does make it quite complicated to think about, well, will markets trade on the bad news in the near term and the downside risks, or will markets look through that and just focus on the vaccine next year? That's why there is still a risk that things could be still a bit bumpy in the next few months before we have the final answer on the vaccine, whether this is something that will help everyone and really will be as helpful as we're all hoping at the moment.
Torsten, wonderful to catch up and great to see you in a new seat. Fantastic. Torsten Slok there, now of Apollo Management. Thank you. We are hearing a little bit more from the Federal Reserve. This is from the Chicago Fed President, Mr. Evans, speaking over on CNBC in the last couple of minutes. He said the emergency facilities have been very helpful. He calls the Treasury decision on those Fed programs, quote, Tom, disappointing. Yeah. That tension just starting to build as the day progresses.
You wonder here, and again, Mr. Mnuchin, I think, scheduled to be on the Death Star as well. Maybe we'll see that coming up this morning. And, John, we'll just see where we are come into Friday and into the weekend as well. It's a movable feast. I should point out the president has tweeted at least 8 times this morning. It is about the themes that he is focused on right now. Nothing, John, to really state about it, but nevertheless, we can state that the president has greeted that beautiful day in Washington.
There is an uncomfortable calm in this market, I've got to say. We're down 6 points on the S&P 500, negative about 0.2%. Not much movement. Lisa, if I told you yesterday, when we were talking about high yield and a price-insensitive buyer standing there on the sidelines, disrupting this market and keeping it insulated, if I told you this would play out in the next 24 hours, where do you expect that market to be?
I would expect there to be more of a disruption. That said, there is a question of, first of all, whether this could get expanded next year, right? So Joe Biden coming in could potentially increase this program for the Federal Reserve, reinstating it in a way and giving it ammunition. So it's not off the table. But there also is a question of how useful it actually was. And here's the thing, John. I think there's a real conversation about whether the Fed should be involved in credit markets at all. But the idea that it can be stripped from them, this ability to do so without discussion and at dissonance with 2 heads of major agencies, that's what I would think would be a little alarming to markets.
Lisa complained when they stepped in, Tom, complaining about the prospect of it
that was what I'm saying.
Away.
I think there's a debate, and I think it's fine.
I hear you.
Carry on.
I know which side of the debate you're on. We all do. It's okay. Alongside Tom Keene and Lisa Abramowitz, I'm stepping away.
You're stepping away?
Else.
I've just been doing my fleets out on Twitter. I'm just doing fleets.
How's that going?
Oh, it's just great. I mean, I'm on the edge. I'm on Instagram. I'm like Instagram husband on Twitter.
Instagram on Twitter.
What's going on?
Kinda.
Yeah, fleets.
Up next,
I don't get it.
James Athey of Aberdeen Standard Investments.
Fleets.
This is Bloomberg.
With the First Word News, I'm Rishka Gupta. If the FDA gives the green light, that coronavirus vaccine from Pfizer and BioNTech could be used in the US next month on high-risk populations. The drug makers say they will file today for an emergency use authorization. Earlier this week, they said a final analysis of clinical trial data showed the shot was 95% effective at preventing the disease. The Trump campaign lost another one. Last night, a federal judge refused to block Georgia from certifying its election results. A hand recount showed that Joe Biden won in Georgia by more than 12,000 votes. Earlier in the day, a judge in Arizona threw out a suit seeking an audit of the vote in a pivotal county. And the Trump campaign pulled the plug on its own suit in Michigan, falsely claiming it had stopped the state's vote certification. There's rest split between the top two U.S. economic policymakers. Treasury Secretary Steven Mnuchin called on Fed Chairman Jerome Powell to return money for several Fed lending programs that rely on Treasury's backings. Minutes later, the Fed put out its own message. It urged that all of the lending facilities be kept in place. Mnuchin told Bloomberg that companies don't need more loans, they need grant money, which must come from Congress. And Congress is getting closer to that $1.5 trillion spending bill that would avert a government shutdown next month. Aides to House Speaker Nancy Pelosi and Senate Majority Leader Mitch McConnell met to hash out the details. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
I do think governments have to continue to support people and businesses. This is a health crisis. It's government's responsibility. We cannot just rely on monetary policy. Withdrawing support now, I said it the other day, would be like closing your checkbook during a war.
Anna Botín there, Santander chairman, speaking to Bloomberg a little bit earlier. A little bit later, we'll be catching up with Morgan Stanley chief economist Chet Anaya. That comes up on the Open in about 13 minutes' time. Trust the recovery, keep the faith. That's the story coming out of Morgan Stanley, Tom.
Yeah, it'll be interesting to see. And, of course, after Ellen Zentner's winter of our discontent comments earlier this morning, this will be an important conversation on one of Mr. Farrow's many properties. We welcome all of you on Bloomberg Television and Bloomberg Radio to a narrow conversation. What we do often is we take a wonderful guest who usually talks bigger and broader, and we note that they say one single thing, and we go narrow. We do that right now with James Athey of Aberdeen Standard Investments, looking at broader investments. But right now, James, in your important comments the other day on China and the idea of China with negative interest rates, is China becoming Europe-like?
Yeah, good morning, Tom. I guess you're referring to the Chinese Euro bond issue, which obviously came with a negative yield. I mean, it gets a bit kind of technical and complicated and confusing for non-bond investors or non-geeks or what have you. But obviously what you're buying there is first and foremost European interest rate risk with some Chinese credit risk thrown onto the top. So while it may feel like from a logical perspective, you should be able to equate a kind of currency, euro currency hedged CGB with a euro denominated Chinese Eurobond issue. What we've seen in emerging markets more broadly and what we see here is that that's not necessarily the case, because obviously the interest rate outlook in Europe is vastly different to that in China.
James, you never have to apologize for geekness here in the bond market. I'm bad and Lisa's even worse, so it's okay.
Guilty.
You can't get guilty.
I'm in a safe space.
But James, folks, this is really, really important. China's not Italy. China's not the U.S. And yet, James, China goes shopping in Europe to do debt in a euro denomination. And am I right that selected maturities had a negative interest rate? That's the price up. That's the massive demand, isn't it?
Yeah, so exactly. If you're a European investor, your home currency is euros, then you can't escape the fact that you face a negative interest rate environment. You can buy all sorts of issues from around the world, but if you do so on an unhedged basis, you're taking currency risk. And so it's not a fair comparison. Once you start to hedge away those currency risks, covered interest parity says that you will end up back with your negative rate outlook. So if somebody from a faraway land chooses to issue in the European bond market and you see them as a credit-worthy issuer, and they come somewhere which is attractive relative to euro-based credit-worthy issuers, then that's something that you will look to invest in, just as a kind of logical extension of your of your home interest rate environment.
James, one reason why I was really excited when I saw that we were going to speak with you today is you've had a very realistic outlook on credit worthiness at a time of uncertainty economically for corporations globally. I'm wondering your response to this morning's news about this growing rift between the Treasury Department and the Federal Reserve over this extra money that went toward buying corporate bonds and municipal bonds. And it raises a question, and the key question in my mind, how much of a backstop have these Fed programs been to credit, prompting the low yields that we see today?
Hi, Lisa. Yeah, thanks for using the word realistic rather than something more pejorative, possibly miserable might have been more appropriate.
No, she does that Monday through Wednesday. Early in the week, James, is when she goes pejorative.
I see. I've caught her on a good day then. So when I studied economics was the study of the efficient allocation of scarce resources. Well, I'd like to believe that money is still a scarce resource ultimately, and so governments must choose where to put their resources. And to me, it seemed that there was a lot of money backing those programs which had thus far gone unused, and there is still a lot of economic need within the US economy rather than within US financial markets. And so to make that choice to say, hey, look, there's nearly $600 billion there that maybe we could deploy in the domestic economy without going through a lot of political rigmarole, that might be a more appropriate, a more desirable, a more efficient allocation of those resources. So I think that's a perfectly reasonable thing. If we get into some sticky situations further down the line, of course, Treasury can choose to appropriate funds to back those those programs again. That's, this doesn't preclude that occurring. How much have those programs backstopped markets to this point? Well, I'd say they've been incredibly effective. Nobody wants to fight the Fed. Actually, that don't fight the Fed has become to blindly follow the Fed for many investors. So I think they have been very effective, mainly through the sentiment channel, not necessarily through mechanics or liquidity provision.
James Athey, thank you for being with us, particularly those comments on negative interest rate issued of Euro paper by China. He's with Aberdeen Standard. Lisa, I must admit, it is an extraordinary Friday. And if we didn't have all the Washington stuff going on in election 2020, it'd still be extraordinary. It's not just about the politics, is it?
No, and it's really the cross currents, as John said, really stunning, and it's amazing.
I can't believe he got that line in and I didn't. But continue.
You could say it. Do you see some cross currents too, Tom? Look at that. Tom Keene said some cross currents. Look, honestly, I think, though, that you do have the economic reality, you have the political noise, and then, it's really interesting to me that on the election front, what we're getting, Georgia actually coming out, the election will be certified with Joe Biden being the winner of that state at 10 a.m. We are hearing that being reported currently by CNN. Markets have already moved on. I find this really interesting, Tom. Washington, D.C., the Beltway has not. But you know what? Markets are moving on, and they're looking to policy, and they're looking to the end of the pandemic next year.
Yeah, it's interesting to see. And, I think, Lisa, that it's fascinating. And, you see for things, folks, something obscure like what James Athey's talking about a negative interest rate issued out by China. That's one of those cross currents that, we speak about as well. I mean, I think of cross currents, and really the way we cross current forward here in the shop is it's all Faro all the time from 9 o'clock on with the cross currents of the open and the real yield. John, what do you have at 9 o'clock?
I'm just sorting out my microphone. I've got Chetanaya of Morgan Stanley.
Who else? Come on.
Look forward to that conversation. We will also have Evan Brown of UBS, and one of their conviction calls is a weaker dollar through 21. I think we've got to talk about that, Tom, whether that weaker dollar actually materializes. I understand that if we get synchronized global growth, if you get behind that idea, risk appetite builds, I can get behind the idea of a weaker dollar with you. And I think the vaccine news of this morning is a little bit more fuel for the idea. That's the trade to get behind in 21.
John, I wasn't being serious about that. Tottenham, Manchester City, what do you think? I mean, we get back to real football.
I think City's in a bit of trouble if they don't beat your Tots tomorrow.
The Tots are on fire, but do the Tots have a defense? I don't see the defense. Is it really evident there? Where's the Virgil?
I love how educated you've
Liverpool?
Become on this. They don't have the Van Dijk type of player in the back four for the
am I
Tots,
right?
but they have a great strike force.
And what
I can't
about
believe
Arsenal?
I'm even calling them the Tots.
Well, that's
Lisa
okay.
knows more about Arsenal than anyone.
The Gunners, the Gunners.
Goodness.
I'm sitting here. I'm
That's
trying
good,
to.
Laura.
I'm looking at my screen. I'm looking at markets. I've got to say, but carry on with the
You look
Premier
at your
League.
screen.
Yes.
Shall I
Lisa,
tease my show
on
and tease
radio,
us out?
folks, on radio, we have a breaking news banner that's in red for Arsenal. That's how much we accommodate Lisa. John,
Is
have
that
a
why we
great
do
day.
that?
Seriously, folks, John
Thank you.
Farrow on the
You
Real
too.
Yield this afternoon. It'll be must watch. David Weston at 12 noon, an important conversation on the markets. This is Bloomberg. Good morning.
once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonises it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the open starts right now. With 30 minutes away from the opening bell, we're down about 0.2%. We begin with the big issue. A new stimulus dispute brewing on Capitol Hill. Treasury Secretary Steve Mnuchin and Fed Chair Jay Powell clashing over the fate of some of the Fed's emergency support programs. The Treasury Secretary preparing to let several of those facilities expire, requesting Chair Powell return the remaining unused funds, telling Bloomberg in an interview the following. The economy has responded very strongly, but there are still areas of the economy that need more support. That's why I'm encouraging Congress to reallocate this money. The Fed quickly responding in a short statement saying the following, quote, "We prefer that the full suite of emergency facilities established during the pandemic continue to serve as a backdrop for our still strained and vulnerable economy. All this coming amid surging infections and increasing restrictions on economic activity." Dallas Fed President Robert Kaplan voicing concerns about the recovery.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough so that local officials, even though they don't want to do more restrictions, they don't have a choice. So the next couple of quarters is going to be very challenging.
On this story, an important story, I want to bring in Bloomberg's Michael McKee, our international economics and policy correspondent. We have a bit of division at a time when we don't want division, Mike.
Yeah, well, what's really interesting, John, is that the markets are just kind of caught between the present and the future. The market that we saw bond yields fall right after this news came out, and we're down all night. But now on the Pfizer news this morning, they're back to sort of unchanged on the day, as they bet maybe this will blow over. But for right now, it is a split between the two sides. After the markets closed, the Treasury Secretary sending that letter saying that he wants to close down a number of the programs, 5 of the lending programs that were put in place in March to keep the economy and the markets going. And then he would keep 4 of those programs, including the commercial paper funding facility and the money market facility, open, but just for 90 days. He's asking for the money back, as you mentioned, that hasn't been spent, which is about $260 billion of the $454 billion Congress originally put forth for them to use. we don't have any indication from the Fed that it is going to give back the money at this point. Mnuchin's argument is that the programs have worked. We saw a big spike in spreads in March in all the bonds that were being sold around the United States, including particularly the high yield area, and those spreads have now come down. So the Treasury doesn't need to have the Fed doing this anymore. But the Fed argues that we could still see this reverse if the markets lose confidence or if this latest COVID outbreak causes problems. And so they sent their response without saying exactly what they're going to do about it. $195 billion already earmarked for the Fed. They still have that money. Some of it's out. They could use that, and they could come back if they needed to by using the Exchange Stabilization Fund at the Fed. That's a sort of pot of money the Treasury Secretary controls, about $74 billion in there. But it still leaves hundreds of billions that would have been available had Mnuchin extended this. And of course, the question is, why are they doing this now? Some saying that the Trump administration just wants to make it more difficult for the incoming Biden administration.
Mike, this just feels very clumsy, and typically Secretary Mnuchin has been very apolitical. He's tried to help the economy, he's worked very well with the Democrats, and he's making the argument that he wants to repurpose those funds. What is surprising to me is that they haven't got ahead of this and got on the same page ahead of time. As far as the money being returned is concerned, is that something that would have to take place now in the next week or year-end?
Year-end is when these programs are supposed to expire, and I guess in theory the Fed can still make more loans, although there hasn't been a lot of uptake. There has been some additional Main Street lending over the last couple of weeks. Now, can they reuse the money, repurpose it? Probably not, because Congress has to appropriate the money. They appropriated it for this particular program, and if the administration wants to use it for something else, they would have to get congressional permission. Although this administration has not been big on getting permission before it does things.
Michael McKee, great to catch up, sir. Thank you. The good news this morning from the Federal Reserve's perspective is that we haven't had an adverse reaction in this market yet. Credit so far, a little softer if you're looking at CDS, but overwhelmingly, we haven't seen the story that I think many people would have expected on the story that has occurred in the last 24 hours. In equity markets, futures are down, what, 0.4% of small caps, unchanged on the Nasdaq, and down 0.2 on the S&P 500. UBS's Evan Brown doubling down on a dovish Fed, writing the following: we still don't think the market has fully grasped just how structurally dovish the Fed now is and its willingness to remain accommodative and ease further, even as the recovery continues. Of the typical reflation trades, we have least confidence in a large rise in bond yields or steepening in the yield curve. Evan joins us now for more. Evan, let's just start with this spat, if we can call it that, between Chair Powell and Secretary Mnuchin. Your first take?
First take is it's suboptimal. I mean, when we look back to March and we think about what got us to today with the economy not in a Great Depression, financial markets not in absolute crisis, it was the coordination of the Fed and Treasury working towards a common goal that was so powerful. To see them now not on the same page is not a good signal to the market. And so I think it's not a great message. I think that the tail risks have risen somewhat in corporate credit, such that, you know, if things really do go wrong, worse than we expect over the next few weeks with the virus and the economy, that lack of a backstop there, or at least knowing we're going to have this gap between the end of this year and into a Biden administration, it's suboptimal. Is it the end of the world? I don't think so. I mean, as Michael mentioned, we've got potentially with the new administration coming in, you can revive some of these facilities, perhaps with not as much firepower, but that 3-week period and not having both sides on the same page, it's not great optics.
Evan, I think what you're saying is important, though, and I want to sort of caution complacency on a morning like this morning. Just because the market hasn't reacted yet doesn't mean the market won't react. And Evan, your point, essentially, as I hear it, is that removing the backstop isn't sufficient to see the market gap. It's about testing the removal of that backstop, testing this market once you have removed it. Is that what you're saying, Evan?
Exactly. So what I'm saying is that right now the market's still feeling reasonably okay about the economy. We know we're going to have a sharp slowdown over the next few months, but the market gets that because of the expected rebound next year. well, what if we have an even sharper than expected worsening of the virus and the economy, and we have to get into even stricter restrictions than we're expecting. Those are real risks, and that is when this market and this lack of a backstop or a weakened backstop will be tested. So it's increasing tail risk as opposed to a reason to sell all credit right now.
Secretary Mnuchin, speaking on CNBC just a few minutes ago, said he wants to spend the money on small business PPP loans, that markets should be comfortable that we have the capacity left. How comfortable are you with the follow the Fed strategy that so many people have lined up behind over the last 6 months?
So, I still think that, the Fed is providing very powerful support. We know that, but to get the economy really in a place where it needs to be to bridge people through the next few months, I think most people would agree that having a little more fiscal support would help, potentially a lot more fiscal support depending on how bad things get. So the Fed has kind of done its job, and it's staying dovish, and we could expect some extension of asset purchases, or at least the weighted average maturity of those in December. Perhaps the Fed will have to do more, or feel they have to do more, given that some of these backstops are being weakened. But yeah, I mean, I think the way we're going to get the extra support and momentum from the economy, it's not from the Fed easing further. It's from us getting fiscal policy where, the near term at least doesn't look great, and looks like we're waiting into January and the new president to get something.
Well, let's get the market calls. You've lost confidence in high yields and a steeper curve. Seen that over the last couple of weeks. That curve has hardly moved 2 Mondays ago from where it was. Same with the 10-year Treasury yield, where you've got confidence right now. Your conviction trade, sustained dollar weakness through 21, Evan. What drives it?
Yeah, so what drives it is the picture on global growth and also relative growth. So the U.S. might have a bit of a soft spot here. We don't think a recession or anything like that, but a bit of a soft spot. When you look around to the rest of the world, what do you see? I mean, you still have pretty solid credit impulse from China. We're seeing today copper at new highs. You still have a solid impulse, fiscal impulse from Europe. You still have coming a new fiscal plan coming out of Japan. And so the relative growth differentials are going to shift a little bit in favor of the rest of the world compared to the U.S., at least over the next few months before we have that normalization in the vaccine. And then I think the other thing is kind of what we discussed on the Fed and the market not fully grasping the Fed's, what has really changed with the change in the Fed's framework. The market keeps trying to price in this hike into 2023. And when the Fed in their own projections has said, we're not going to hike in 2023, as the economy does recover, the Fed is going to say, you know what, we're still digging in because we want to see that inflation overshoot. We're just not going to get that for a while. So it's going to be hard for other central banks to outdove the Fed. And yeah. I think that puts a structural downtrend on the dollar.
I hear you, Evan. I think that's when the reaction function over the Fed and that shift in the reaction function gets powerful. It's when we start to see the recovery through 21, and they just shrug. Evan, great to catch up. So my best to the team, weren't you? Evan Brown there of UBS. And this market right now, 19 minutes away from the opening bell. Equity futures down 6. We're off a little more than 1/10 of 1% at the market desk with your movers. Here's Abigail.
John, small moves on the surface in the pre-market similar to yesterday. Beneath the surface, though, let's take a look at some of the bigger movers, starting off with some of the vaccine-related companies. We have the shares of Moderna and BioNTech both popping higher on the news. The headlines that the EU may approve COVID vaccines, and they may be ready to spend $10 billion on these vaccines. The stock's reacting very well. Foot Locker is higher on a very strong quarter. They put up a same-store sales of up 7% versus an expectation of a small decline. Williams-Sonoma soaring up 8%. Their comps were really soaring, up 24%. They beat earnings by 84% to put up $1.21 in earnings. And the reason I'm bringing this up, it seems to be in contrast with the retail sales. So there seems to be these idiosyncratic pockets of strength in retail. And then, John, one sector that is weighing just a bit on the S&P 500, the banks, it stands out because we do have the yield curve steepening just slightly. Yields are higher, so it may have to do with that spat between Treasury and the Fed, John.
Good point. Coming up on this program, the CDC issuing a Thanksgiving travel advisory with restrictions ramping up across the country. That conversation up next with Nisha Patel of Parametric. From London and New York this morning, good morning. 18 minutes away from the cash open. Futures down 6. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Help is on the way. We need to actually double down on the public health measures as we're waiting for that help to come. We're not talking about locking down. We're talking about intensifying the simple public health measures. If we do that, we'll be able to hold things off until the vaccine comes.
Dr. Anthony Fauci urging Americans remain diligent until vaccines become widely available. The task force briefing reporters for the first time since April after the CDC recommended cancelling Thanksgiving travel plans. This as a number of states impose new restrictions. California ordering a 1-month curfew. Rhode Island strictly limiting gatherings for 2 weeks. And in New York, Mayor Bill de Blasio anticipating even tighter curbs still to come.
It's just a matter of time before indoor dining will close. It's very likely to be in the next week or two.
In the next week or two, it's inevitable. Bloomberg's Sarah Ponzek joins us now for more. These restrictions, Sarah, keep piling up.
They do keep piling up, and it really is just an unsettling, a sobering reminder as we head into the holiday season that COVID-19 is very much still here, and cases are not only rising, but they're rising quickly. If we just take a look at average new cases in the U.S., yesterday we saw daily cases of 188,000. That's the second highest daily toll on record. The record came last Friday at 190,000, and in fact, over the last 34 weeks, 21 of those records have come on Fridays. Now, as you see that blue line there, that's your 7-day moving average of daily new cases. It's really just been shooting ever higher. And with that, as we just heard, restrictions are piling up. California imposing a 10 p.m. curfew that will affect 94% of its residents. We just heard from Mayor de Blasio. We already have public schools closed, but the impending closure possibly of indoor dining too. We also have seen Michigan entering a 3-week quote-unquote pause, and the list really goes on. Here what you're looking at are the states that have seen the highest average daily new cases over the last 2 weeks. Illinois, near 12,000 a day. Then you have Texas, California, Michigan, and Wisconsin, both near 7,000. Ohio, Florida, Minnesota, all above 6,000 a day. Of course, though, the flip side to this is the positive vaccine news that we have been getting. And this is what markets have decided to focus on. Well, today we have news that Pfizer and BioNTech do plan to file for that emergency use authorization from the FDA as soon as today to hopefully get approval for use of the vaccine as soon as next month. However, if you look at history, the timetable of these approvals from the FDA over the last 5 years, if you look at vaccines that have gone for this type of approval in the fiscal years 2015 to 2019, it's usually taken anywhere between 4 months and a year to get this approval. You see meningitis at the lower end of the spectrum, HPV, shingles, the flu, further out towards the year end of the spectrum. Of course, there's a lot of pressure this time. This is a high priority vaccine. You hope that we will get approval with speed and with accuracy, but certainly the push is on, especially as we see case counts rise against the hope for a vaccine sometime soon, John.
Sarah, great work, thank you. We'll touch base with you around the opening bell. This market is comfortable, to borrow that word from Secretary Mnuchin he used about 20 minutes ago. It's comfortable looking through and de-emphasising the near-term risk. That was something that Jonathan Golub of Credit Suisse said on this programme about 24 hours ago. Nisha Patel of Parametric expecting the tug-of-war between the virus and the vaccine to continue, writing the following. The short-term outlook seems bleak. Any additional vaccine approvals and distribution news may create volatility within a bond market, reluctant on pricing and a lot of positivity. Nisha joins us now for more. Nisha, let's talk about that. In this Treasury market, 2s, 10s, exactly where they were 2 Mondays ago before we got the news. The 10-year yield almost exactly where it was 2 Mondays ago before we got that Pfizer news. Why, Nisha?
Yeah, I mean, look, you can't ignore the fact of, you know, as we just spoke about and have been speaking about, all these additional shutdowns taking place, the increase in the infection rate. I think the reality is setting in that although the vaccine news, it's groundbreaking, it's certainly really great news, it's going to take a lot of time for it to actually then be approved, for it to be a distribution. We are looking at a year's time frame, that you're talking about a full distribution to the entire population of the country and really around the world. And so while that initial reaction in the bond market, and first on the Pfizer news, was positive, I think the reality of what this negative economic impact is going to be over the next few months is really settling in. And so even if in December this vaccine, Pfizer's application goes through and it is fast-tracked, I don't expect there to be a massive sell-off in treasuries and that being priced in, simply because from now until then, we can certainly expect a lot more significant shutdowns, particularly indoor dining, additional schools. I mean, here in New York City schools are shut down. I do think it's a matter of time before indoor dining across the state is going to be shut down. And so I think that is what the bond market is focused on. And
agrees with you, Nisha.
Yep. Yes, and so I think the reality is that, look, even from now until then, you have a slew of economic data, right? More retail sales numbers, labor market numbers coming out, payroll, all before the Fed meeting. So all of this data we kind of know is going to be negative. If it's going to be far worse off than we expect, than what even the stock market is expecting, I think you could certainly see a pretty negative reaction, obviously, in the stock market, in a rally, and yields possibly even going lower in the Treasury market from here.
Nisha, can you imagine, though, in a post-pandemic world, if we can get there with a vaccine, the Treasury market looking like it looks right now? Maybe that's part of the story, that this is what the Treasury market might look like even after we have the vaccine rollout, even after we move away from the restrictions, that this is the Treasury market now with the Fed not going anywhere for a long, long time and inflation perhaps not coming either.
Exactly. So look, I think in the December meeting, the Fed is really going to emphasize and maybe focus on two things. Really emphasizing that they're going to keep rates at close to zero for an extended period of time, really provide that dovish guidance. And again, in light of the new developments, in light of the weaker data, in light of the shutdowns, and let's be honest, without fiscal stimulus, there's more pressure on the Fed to do something. And so I think they will have to address that. I also anticipate that they may take the additional step, and especially in light of Treasury Secretary Mnuchin's kind of news, what can the Fed do to possibly help ease the monetary policy or ease conditions? They may extend maturities in terms of what they're purchasing. And so if that policy is in place for quite some time, beyond the vaccine, beyond the distribution, beyond kind of a bulk of the population getting vaccinated, I'm not sure you see a massive shift in terms of where the Treasury market is, simply because when you're looking at inflation, it's going to take us, I think, a long time to get there. Now, if we get fiscal stimulus and multiple rounds of significant fiscal stimulus, I think that's a different story. But unfortunately, looking at this divided government that we're going to be kind of working with, that unfortunately is going to just take, I think, a lot more time. And I think the size of the fiscal stimulus, unfortunately, is just not going to be what some of us might have expected.
Nisha, great to catch up. Really appreciate your time this morning. Thank you. Just want to bring you some news very quickly. Republican Senator Rick Scott has tested positive for COVID-19. So that's another one. Republican Senator Rick Scott testing positive for COVID-19. We wish him the best, that's for sure. Coming up on this program, the analyst action you need to know. That'll be next in our morning calls. And later, Katie Kaminsky of Alpha Simplex joins us at the opening bell, weighing in on the rotation debate that has dominated the conversation over the last 2 weeks. From London and New York this morning, good morning. This is Bloomberg.
Jawohl. Können Sie einmal noch ganz kurz zu uns kommen? Ganz kurz.
Davor stellen.
New Economy Forum brought together over 600 leaders to discuss the most pressing economic issues facing the world today.
Join us as we recap the important conversations from the week on our New Economy Forum special this weekend on Bloomberg Television.
Five minutes away from the cash open. Equities just slightly negative on the S&P. Let's get you some morning calls. Your first one from Wedbush, downgrading Shake Shack to neutral. $77 price target. The analyst saying it's tough to justify a higher valuation following the stock's recent rally. We're down a little more than 1% there. Your second call from the team at Bank of America, upgrading United Rentals to a buy at $275 price target. The analyst expecting vaccine developments to accelerate the rebound in industrial production. Bit more good news this morning on that front. That stock up by about 2% in early trading. And your third and final call, it comes from Stifel, raising its price target on Starbucks up to 108 with a buy rating. The analyst expecting the vaccine to fuel a rapid recovery for stores located in crowded urban areas. That stock negative, though, down about 0.4%. Up next on this program, Katie Kaminsky of Alpha Simplex joins us to weigh in on the great value versus growth debate dividing Wall Street at the moment. The opening bell just around the corner from London and New York. This is Bloomberg.
it's important for each side to understand the sensitivities of the other.
Former U.S. Secretary of State Henry Kissinger said the incoming Biden administration should move quickly to restore lines of communication with China that frayed during the Trump years, or risk a crisis that could escalate into military conflict.
Unless there is some basis for some cooperative action, the world will slide into a catastrophe comparable to World War I, with a technology that is even more difficult to control than the technology of the period then.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Imagine a tug of war with either side pulling really, really, really aggressively, but ultimately going nowhere. There's a lot of tension in the rope. That's where this market is right now. Not much price action at the headline level, but a lot of tension. The near-term risks weighed up against the forward outlook, which is looking better again this morning. We're down 0.1% on the S&P. We erased the overnight gap lower off the back of the tension between Chairman Powell and Secretary Mnuchin. Switched up the board in the bond market. Talks about talks again down on Capitol Hill. Stimulus plans may be up 2 basis points on a 10-year to 0.8472%. And in foreign exchange, euro dollar not doing a whole lot, 118.70. Speaking of tension on the EU spending plans. Guy Johnson, no doubt, will be talking about that in about 30 minutes' time. In the commodity market, we pull lower on crude. We were positive earlier. We're down 0.5% to $41 and about 50 cents on WTI. That's the cross-asset story. Let's get you some movers at the open at the market desk. Here's Abigail.
John, well, with the major averages basically flat, let's dive beneath the surface and find some of the bigger movers. And starting out with the healthcare space and virus-related movers, we're taking a look at Pfizer because, of course, the company is seeking FDA emergency authorization for its COVID vaccine today with its partner BioNTech, and Moderna is also higher, and the EU is saying that they may approve some of these vaccines and then spend $10 billion on the vaccines of Pfizer and Moderna and BioNTech. And then AstraZeneca also popping, perhaps another bullish tailwind from yesterday's news that their vaccine has proven to be effective, helping the elderly. On the other hand, we have Gilead Sciences dropping to the downside on the news that the World Health Organization has advised doctors to not use its treatment remdesivir, saying that there's no evidence and it improves survival. This is tough news given the gap that you've been talking about so much, John, between the difficult near term and the vaccine really coming into play later next year. But right now, Gilead Sciences is down. And then finally, we don't typically look at stocks that aren't moving, but those major averages aren't really moving. If we take a look at the biggest names, Apple, Microsoft, Amazon, and Alphabet, barely moving. The reason this matters, John, right now the S&P 500 down ever so slightly on the week. It will probably come down to these names, whether they can find a bid or if they drop. That may be the way the S&P 500 goes, John.
We'll take a bit of market calm. Abigail, thank you. About 2 minutes into the session, we're down about 0.1% on the S&P 500 on the session, down almost 0.2% on the week so far. Bottom of the pile, the financials, energy, top of the pile, utilities, real estate. The great debate, let's turn to that now. It's been dividing Wall Street. It's cyclicals versus big tech, lockdown losers versus stay-at-home winners, strategists juggling near-term risks with long-term tailwinds. Weighing in on the tug of war.
You're seeing more the cyclicals and the value trade outperforming.
Do you buy into this value rotation, yes or no?
That has been the trend month to date.
That's the big tug of war.
You'll start to see
a move towards cyclical stocks.
We are in a cyclical recovery phase.
The tech dynamic is going to be critical.
The pandemic profiteers, right? So big tech and the FANGs.
Secular trends are still there.
Big tech is still going to be performing well next year.
The deeper question is, do you believe the 10-year yield can rise?
Unless you get to 1.25 or something by the end of next year, the bank trade won't work.
That's really what we're going to be grappling with.
That's a bond story as much as it is a stock story.
Accept the fact that there's a lot of cross currents in the market right now.
Turns to a bit more of a stock picker's market.
It has been the market debate of the last couple of weeks, and on that market debate, Bloomberg's Sarah Ponczek. Hey, Sarah.
Hey, John, and it's a rotation debate that is really based on future expectations and your timeline here. Are you worried about these near-term risks, COVID-19 cases rising, restrictions? What is that going to mean for companies, especially those with heavy debt burdens? Or, since we now have the idea of a material vaccine, are you focusing on 12 months from now? Are you focusing on the hopes that life will normalize, the economy will normalize, and all of a sudden you will see this rotation truly take hold? Well, we have seen it in the early stages. Value, small caps, cyclicals. What you're looking at here, this is an index that breaks the S&P 500 sectors into cyclical versus defensive sectors. I do want to note, though, technology is not a part of this. It's more so financials, energy, materials versus the likes of utilities, staples, real estate, your classic defensive plays. Well, for much of the recovery since March, we have actually seen cyclicals lead the way, but we have seen a push higher anew. This as the Russell 2002, if we add small caps to the list, on track for its best month since 2000. Also, S&P 500 value stocks on track for their best month ever. If we put this in COVID terms, Solactive and Indexer, they have indexes that track stay-at-home stocks as well as work-from-home stocks, a little bit different. Well, over the past month, these have really just been left in the dust by your more classically cyclical industries like banks, like energy, for example, as you're looking at right here. Banks having their best month since 2016 at the moment. I also track a reopening basket on the flip side of those work from home, stay at home Solactive stocks, up 20% this month alone. It's pretty amazing to watch. That really includes hotels, cruise lines, airlines too. But let's take it to a single stock basis too. What have been the best performing S&P names over the past 5 days alone? Well, much of that has come from energy, retail too. Retail, we've seen some earnings reports over the last week or so. Travel stocks too. I'll bring you some individual names as well. Diamondback Energy, 5 days up 25%. Carnival up 22% in 5 days. These are not small moves by any means. We are seeing a very quick, a very sharp catch-up trade, John.
A big catch-up trade. My words precisely, a catch-up trade. Is it a durable investment over a longer time horizon? Alpha Simplex Chief Research Strategist Katie Kaminsky joins us right now. Katie, let's talk about that. I've asked this question so many times in the last 2 weeks. Sarah and I have been talking about it. The difference between a catch-up trade and something more durable, sustainable. How do you draw a distinction between the two things?
Yeah, that's a good question because, frankly, we also forget that historically in all of the recent election environments, we've seen this type of move. And so what we're trying to do is disentangle how much of this is sort of pseudo resolution of some of the changes that we have been intending coming with the election and this sort of optimism that change can often bring some stimulus to things that have been under pressure. So I think that's one theme we're looking at. Obviously, there was a huge momentum reversal last week that came into play. And so for us, really, it's about, is there a structural change that actually will keep this going? My concern might be just that this is not your normal post-election period. This is not a normal environment because you have all of the challenges of a pandemic scenario.
What's unleashed this, though, wasn't the election, Katie, or just the election. It was also the vaccine news. And this concept of normal, trying to understand what the back end of 2021 looks like and getting back to normal. Normal in the equity market, normal in the bond market, normal in the economy. Katie, I don't even know what that word means anymore. What does normal in this market mean?
Well, that's a good question because what we've really seen, we've seen equities recovering some. We've seen a weaker dollar theme, which has been very strongly linked to the idea that we're going to get help in terms of solving these problems. We've seen bonds no longer being our safe haven. We've also seen reflation in commodities, which suggests that demand is coming back and that there's some hope in sort of basic materials. To be frank, some of the things we've been watching the most are agricultures because agricultural moves have been spectacular this fall. In fact, you look at soybeans and soy meal and some of these basic products, that kind of gives us an indication that people are either nervous about the pandemic and buying those things and concerned about them, or that, these base commodities are actually in demand and things will eventually recover.
That's the soft commodity story. Talk to me about energy, because Brent and WTI have had a really tidy rally over the last month. Metals, copper, multi-year high as well. Katie, is that the cleanest, relatively speaking, the cleanest way to get a read on the global economy right now? Not in the treasury market, the credit market, which has been so distorted by central banks, not in the equity market, but maybe in commodities.
Exactly. We've been following commodities and currencies since the summer. They have been moving around a lot more. We are definitely getting a weigh-in on how people are feeling about the situation from those assets. Let's start with energy. Energy recently took a massive rally on risk on expected demand based on vaccine news. There seems to be some healthy behavior farther out the curve as well, so those are positives for energy. On the other side, this rally didn't break out of its range. Restrictions, less travel, low demand in the short term, and even reports yesterday about potential oversupply in the U.S. might be putting energy a little bit more in the backseat again. So I'd say that energy has been the prime indicator that we looked at pre-COVID in March, and so again, we're trying to follow it now.
Katie, great to catch up. My best to you and yours. Katie Kaminsky there on this market. I want to head back to the market desk, get you up to speed. Price action really muted through much of this morning. Abigail, what have you got?
Well, John, let's take a look at two of the sectors that are dragging, which have actually done very well over the last 5 days. But today we're taking a look at banks and energy. So JP Morgan and Bank of America both trading lower. And it stands out because we actually have the yield curve steepening. We also have yields climbing slightly, yet the banks are down. So again, this may reflect that spat between Treasury and Fed, and investors not knowing what it means. On the energy front, we have some weakness there. It is a sector that is down, probably in sympathy with oil, and also just taking a little bit of a breather given the monster rally. On the other side, John, we've had these sectors, these reopening and reflation sectors trading higher in recent times because of the vaccine reality that you've been talking about. And there is Pfizer up 2.6%. Of course, in the news that they, with their partner BioNTech, are seeking the FDA emergency authorization for their vaccine today for use beginning in December. So that tension is interesting today, but in a reverse way, actually, with the banks and energy, at least right now, not participating, taking a breather.
Great news on the vaccine front. Abigail, thank you. 10 minutes into the session, equities down by a little more than 1/10%. No drama. Elsewhere, investors looking to turn the page as President Trump continues rejecting the elections. That result is coming up next with Morgan Stanley's Chet Anaya. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We've been shouting from the rooftops for a very long time. There is a monopoly problem in this country, and in particular, there is a Google problem in this country.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
We've entered a very difficult transition period. How this plays out, time will tell. But I think markets generally will start to look ahead. They'll look through the noise. And I think there are too many fundamental problems to worry about, whether they be corona-related, whether they be fiscally related, or the degree of economic scarring related.
Peter Dixon there of Commerce Bank saying markets will ultimately look past the election noise. This, as Republican Senator Mitt Romney denounces President Trump's refusal to concede, tweeting the following: having failed to make even a plausible case of widespread fraud or conspiracy before any court of law, the president has now resorted to overt pressure on state and local officials to subvert the will of the people and overturn the election. President-elect Biden also moving on as well, selecting a Treasury Secretary and hosting top Democratic leaders Speaker Pelosi and Majority Leader Schumer, Minority Leader Schumer or otherwise, in Wilmington, Delaware. Let's bring in Bloomberg's international economics and policy correspondent Michael McKee for more. Mike, let's just talk about Treasury Secretary. We've been told he's picked one. We'll find out on either side of Thanksgiving. Any names in mind?
Well, there are the big four names that have been bandied about, Lael Brainerd and Raphael Bostic of the Atlanta Fed, and, of course, Roger Ferguson from TIAA, who used to be a Fed vice chairman, and then Janet Yellen. So it's in theory one of those four, but nobody really knows yet. The one thing we do know is that Biden said that we will find out it is someone who I think will be accepted by all elements of the Democratic Party, from the progressives to the moderate coalitions. So we'll see sometime next week, it seems, who's going to be the new Treasury Secretary. Meanwhile, as you say, the markets aren't reacting to much of any of this. As Jay Powell has said over and over again, the virus controls the economy, and it seems to be controlling the markets as well all week long, whipsawed by news of exploding COVID cases and progress on the vaccine front, rather than anything that's going on in Washington. Yesterday, President Trump remained holed up in the White House, refusing to concede he lost the election. His minions losing case after case in state courts as they try to overturn the results, but 187,000 new COVID cases. The state of Georgia certified Joe Biden as the winner after a recount. A lot of head shaking, but little reaction as Trump's legal team held that bizarre press conference yesterday. Markets not buying the argument, apparently, John, that late Venezuelan dictator Hugo Chavez set in motion a vast conspiracy to take over the U.S. government. Now, today, Trump does make a public appearance. He's going to be delivering remarks about lowering drug prices this afternoon, which might have some market impact, though the COVID news is driving that sector at the moment. He's also meeting with Michigan Republican lawmakers, trying to convince them to overturn the election in that state. Meanwhile, as you mentioned, Joe Biden has talked about the possibility of a lawsuit to force the government, the current administration, to start the transition process. He said he's named a Treasury Secretary, though he's not telling us who it is, and he is going to hold that meeting with the minority leader. Well, let's just say the Democratic leader in the Senate. We'll find out January 5th whether he's the minority or majority leader, and, of course, Speaker of the House, Nancy Pelosi. Oh, and we should mention, it is Joe Biden's birthday today.
Please.
He's 78 years old.
Would you like to wish him happy birthday, Mike?
We wish everybody a happy birthday on their birthday, and felicitations for the year to come.
There we go. Michael McKee wishing everybody a happy birthday. Morgan Stanley's Chet Anaya remaining bullish on the recovery. Despite rising short-term headwinds, he writes the following: after a V-shaped recovery to pre-COVID-19 levels, the global economy rises to its pre-COVID-19 path by the second quarter of 2021. Chetan joins us right now. Chetan, always lucky to catch up with you, sir. You've been so constructive on this rebound for the global economy. Many people doubted it. You've been right. Let's just talk about what's happening in the U.S. economy specifically. Not the global recovery, but the U.S. recovery. You've put out a piece recently on the high-frequency data, very recently, in fact, Chetan. What are you seeing in this U.S. economy and the deceleration into year-end?
Well, John, we expect a softening of growth in the fourth quarter. So the tracking indicator is showing that the fourth quarter will be about 4.3% Q-on-Q annualized. And then even in the first quarter of 2021, we're expecting GDP growth to be around 3.5%. So growth holds back in the winter, but we see a resurgence from March, April onwards. That will take the US GDP growth to 5.9% year-on-year growth in 2021, John.
Chetan, what stands out for me, looking at your research and where you've been an outlier, which ultimately led to you getting the right call, was the degree to which private sector risk appetite would be reduced off the back of what has happened in the last 9 months. Are you seeing the same thing again?
Yes, absolutely. I think we got the whiff of the private sector behavior in the third quarter, John. As the restrictions were removed, we saw a sharp rebound in consumption as well as even the investment indicators. And we're expecting something similar to come through in March, April. Look, I think vaccine is one aspect, but our biotech analyst, Matthew Harrison, is indicating that you will see a roll-off of new cases in the month of February, just by the fact that the weather will be changing and it will alter our behavior to be more out instead of being indoors. And then vaccine itself will be quite helpful. And when we are analyzing the vaccine impact, we are looking at vaccine being available to the vulnerable sections of the population. You don't need to achieve herd immunity to keep the economies open. And I think that's probably the most important aspect about vaccine to be considered, John.
Chetan, you believe in the resilience and dynamism of the US economy. You've believed in this recovery when many people, including myself, really underestimated how quickly we would bounce back. Chetan, is there anything that could derail this call that you have, that would disrupt your base case?
Well, John, actually, much unlike everybody else, which is worried about growth slowing, the thing that worries me most is the potential upside risk to inflation. I think
we've lost Chetan Nair there of Morgan Stanley. Chetan Nair of Morgan Stanley weighing in on a shifting inflation regime. It's in the research piece if you want to reach out to him to catch up with him about that. Chetan Nair of Morgan Stanley. Thank you, sir. In this market right now, really muted price action. I want to touch on the sector price action and catch up with Abigail. Hey, Abigail.
Hey there, John. Well, I have to say what you're not supposed to say, and that is it's a little bit of a snoozer right now. We have the S&P 500, as you know, down less than 0.1%. Sector-wise, we don't have any sectors moving more than 0.4%. But let's bring out some of the action beneath the surface. And if we go into the Bloomberg and use the IMAP, we will see a pretty even split. What really stands out, though, super interesting, utilities, the best sector, up 0.4%. That should not, in theory, be the case, given the fact that you have yields in the yield curve rising, because that creates competition for the dividends that would make utilities attractive. On the other hand, financials, which should be rising on that yield curve steepening, that's the worst sector, down about 0.4%. Even more interesting than that little tidbit, John, is on the week. What we're looking at here, the top sectors are the cyclical sectors, including energy, which is up about 5.5%. And then we also have the financials up about 1%. Then take a look at the two best performing of the down sectors, tech and communication services. That's, of course, Apple, Microsoft, Google, Facebook. Those stocks are going to really determine whether it's an up week or a down week for the S&P 500, currently down about 0.2%. If those stocks can catch a bid today, maybe the S&P 500 ekes out another gain. If not, it could be a down week for stocks. Overall, though, on the surface, flat both on the day and the week, John.
Abigail, thank you. 22 minutes into the session, not much to discuss. In the last 24 hours, the news flow has been amazing. On the COVID-19 restrictions, CDC warning against traveling for Thanksgiving. We've had California ordering a late-night curfew. We've had New Hampshire issuing a mask mandate. We've had Rhode Island issuing a 2-week pause that begins at the end of this month. But the hope is that we have a vaccine. And that vaccine is not just a hope, it's a reality. With Pfizer this morning announcing they will look for that emergency authorization, and their vaccine could be start using that vaccine next month. I'm almost lost for words. It's good news. 23 minutes into the session, we go nowhere. This is Bloomberg. the weeks are just slipping away a little bit now, aren't they? It's just a waiting game, waiting for the vaccine. At the same time, you can't hang around. Things are getting worse on the COVID side of things in the United States, and more restrictions are coming through as we wait for that vaccine from Pfizer to be distributed. Maybe in the next month, hopefully in the next month, in the United States of America. Equities down about 0.25% on the S&P 500. We decline. We're down 0.2 on the Nasdaq. That's the story of the equity market. Coming up through the day in your trading diary, President Donald Trump delivering remarks at 2:30 Eastern. G20 leaders meeting virtually over the weekend. Remember the last time they met? Tone deaf. Let's hope they've got it together. A lot of Fed speak coming up through the day as well into Monday. Daly Evans speaking on Monday, plus we get PMIs from the US and the Eurozone. St. Louis Fed President Jim Bullard speaking on Tuesday, and the FOMC minutes on Wednesday. And finally, US markets closing for Thanksgiving holiday on Thursday. We'll be back with you on Friday. From London and New York this morning, good morning. For our audience worldwide, this was the countdown to the open. Catch me on Twitter to continue the conversation at Faro TV. This is Bloomberg.
This new law that came down from China's National People's Congress Committee ended up leading to the disqualification of 4 pro-democracy lawmakers.
This is probably the very final and complete crackdown.
I hope you understand it is not anything new at all. This was supposed to happen.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off. These guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has coming here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He says things of in life happens. You know, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname
Pocahontas.
Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about $1 billion loan program?
I have not.
Okay.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you,
millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and he was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hack emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for
Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
And from that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it is widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor schoolteacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to USA, 24 people went for the job. 23 people accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker, and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it served him well.
Thank you.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different...
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, Valleywag, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
"2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I've learned so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits at different wavelengths. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, it is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Spend cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice. You've got to be able to judge material temperatures. You've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, and you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives, so we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom, so as soon as I had one I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours, start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table, once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力，所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同质互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of like predominantly Asian artists, you know, really like making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but like for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. Like, to be honest, I would even go to the bathroom here. I would like take pisses here, you know what I mean? Like, it was, you know, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and like just the shit that he was saying, like the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with Dat Stick like 2 weeks later.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just like everything about it, man. Just like, it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets like super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I did the sound check.
How was it?
It was tight.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier, you know, and it's just more entertaining. We just edit it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on and a Reebok pouch. This is the hardest nigga of all time.
You said when you come for a chigga like me. That was dope.
Like, it's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, it's like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chiga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
It's just Taco Bell. What could possibly go wrong?
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chiga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. I was the third person online.
So why'd you get here so early?
Because I want to see I want to touch him.
What do you guys think of Joji?
Oh my God!
That's my dad, son.
You guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for Idiot's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store when customers touch and feel products? And we created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said, "It feels like I've been released from prison." Do you want these, Mrs?
Definitely.
Definitely. Right. Yeah. And she could say hello to everybody, people she hadn't seen for months.
It's
Hi, it's
Jade.
Jade. Oh.
So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand. Are you ready? Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do. Was that? Good. It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably. He's written it out bigger on the board. Thank you. Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures. Whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify Route 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I could stretch it. I could throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So, and why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now.
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうとどの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとはキャラクターとしてすごくYouTube とかで検索するとたくさんの初音ミクが出てくるんですけども、元々の初音ミクのその原点は歌声を合成するソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていう存在自体がボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでにプロになって活躍している方もいらっしゃるんですけれども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいになってきて、ライブも数十本、数百本だったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになっています。初音ミクらしさって僕はあんまりない。初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在しています。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the BoFlex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit. And action! This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What up, everyone? It's your girl, Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like,
Canada.
Is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oh, Lily, wear the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rusovsky is the CEO.
It's like a high-powered microscope, and so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rusovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals, there's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did, and should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner, and they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas_a_chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned even if there are swerves ahead.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done. but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers. Yep. Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, etc. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there. When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year. Well, peanuts by the standards of profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan. But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020? I think that we'll be profitable before 2022. This is the business itself. Do you want to come back a bit closer, 2020? Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks. To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things? Well, I don't think that profitability and culture are their issue. The company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at. Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on. The lawyers are lining up outside the door. Which one do you sort of think? Which one do you fear most? I suppose out of these different things. Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff. Some of these things like pricing policies, surely they go right to the heart of what
Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in
means
to
a layman like
feathering
me?
crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
listen, I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this time this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Live from my home in New Jersey, streaming on YouTube. Check it out, everyone. Yes, TGIF. It is Friday, November 20th, 2020. I like that kind of numerical alliteration. Politics, policy, and the virus. We've also got a good old spat topping our headlines. And we've got stocks slipping as traders weigh a conflict between the White House and the Fed over emergency lending programs. We're going to get into that over the next couple of hours. First up, though, let's get a check on that trading day. Let's bring in Charlie Pellet.
It's Friday. You made it. Here's what's going on. We've got stocks trading mixed right now. Stocks slipping as traders weigh a conflict between the White House and the Fed over emergency lending programs, along with assurances that the government's got plenty of room to help the economy. Right to the numbers, with the S&P down 6. That is a drop now of 0.2%. The Dow down 130 points, down 0.4%. And Nasdaq is up 18, now higher by 0.2%. Nasdaq 100 index little changed, up by less than 0.1%. Pfizer shares are higher after saying it will file for emergency approval of its COVID-19 vaccine. Pfizer up now by 1.7%. Gilead Sciences lower after authorities advised against using its remdesivir drug to treat COVID-19. Gilead shares, they're lower now by 0.8%. 10-year yield 0.83%. Gold up 0.4%, $18.73 the ounce. And West Texas Intermediate crude up 1%, $42.19 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Lovely, lovely. Thank you so much, Charlie Pellet. It is time to set the Bloomberg Business Week agenda. For that, we've got Vince Signorella, global macro strategist at Bloomberg News. He's on the phone in White Plains. Dave Wilson with us, stocks editor at Bloomberg News. on the remote access from New Jersey. So, Vince, I kicked it off at the top of the show. Politics, policy, the virus. We've got, again, I feel like the same old story, this conflict. You know, markets, people, everybody seems to understand. Bloomberg New Economy Forum with global leaders understanding about the importance of backing up our global economies right now. And yet it feels like Congress didn't quite get the memo.
I'll tell you, it's striking, really. I mean, markets are talking about the spat between Mnuchin and Powell. Traders I talked to, and I totally agree, it's not a spat. I mean, there's money sitting on the Fed's books that's going nowhere. I mean, if that were in Powell's wallet and he opened it, a moth would fly out. Nobody needs the money. Mnuchin wants to take it, and with Congress's approval, do PPE and small business loans.
Is Mnuchin right? Is Mnuchin right, Vincent?
Oh yeah, absolutely. The money is not going. Is doing nothing. And if the Fed needed it, they would get it again tomorrow. So, you know, making this a political football the same way they're making everything else a political football these days, as in stimulus, is insane. Pelosi today in her press conference said, we're going to work on an omnibus bill. Well, that has to assume somewhere in the $2 trillion range. We know that's not going to fly in the Senate. If she attaches that to a CR or makes that the budget bill going forward, we're going to face a government shutdown on December 11th. I don't know why these folks aren't getting the message. It's mind-boggling.
Yeah, which is certainly not something that the markets need right now, if you think about it, right? Like we've just kind of, I feel like we're slowly again. And when you say CR, you're meaning a continuing resolution? Continuous resolution,
yes, which neither side actually really wants to do. They do want to get an actual budget in place.
Yeah.
But they can't agree with the price of a Metro card at this point. So I don't know what the heck they're going to do.
All right, Dave Wilson, come on in. You're watching the markets. We're well off our lows, at least on the Nasdaq. Yeah, I guess on the S&P as well. But it feels like it's been a market. I've said it a couple times this week where investors are just like, yeah, I'm not really into committing to anything too much right now.
Yeah, it does have that look to it. I mean, you go through the 11 main industry groups in the S&P 500. 8 of them are lower. Utilities, healthcare, communication services, the exceptions. You look at individual stocks, you see 3 down in the S&P 500 for every 2 that are up. So, there is sort of some broad-based weakness, maybe more so than just looking at the index would tell you. And you think about it, we're really pretty much through with third quarter results at this point. So it starts to become a waiting game for the holiday shopping season and year end. And, what are companies going to say about that period? And, are they going to provide any sense of what they're anticipating for next year? Because a lot of companies never kind of went back to providing any sort of forecast after withdrawing them in response to coronavirus in the first and second quarters.
Fair enough. And I talked to the Mattel CEO, and they have seen a boom because of families at home, kids at home. They've been selling a lot of toys. They have been doing really well. And they anticipate the same thing for, the upcoming holidays, that people, because they feel like we can't go anywhere, we can't spend it on travel, we're going to spend it on our families, the small units, hopefully, that are only going to be together. I mean, Vince, what are you anticipating? I mean, are you spending money? Are you starting to think about the holidays? Maybe you'll do a little bit more this year?
Well, I'm starting to think about the holidays. Actually, one of the things my wife and I did, I give her credit, wasn't my idea, is that we're buying relatively moderately priced a few computers, laptops, to give to children who are learning from home and who don't have one, so they can at least get involved in the education program. I'm spending what I spent last year, to be honest. I'm not really pulling back that much because there's really not a lot else to spend on. Normally we would take a vacation in November. We obviously didn't do that this year, and we would normally even take one in February, March, and I'm not planning to do that. So Fauci just made a comment just a moment ago, a little bit throwing the airlines under the bus, said he'll feel safe on an airplane when there's a virus. So the head of the NIH isn't getting on an airplane anytime soon, it doesn't sound like. So I don't think I will either.
We're going to check in with
the holidays are going to be – oh, I'm sorry, go ahead.
No, we're going to check in with the CEO of Trivago and talk about the travel industry. He's been with us several times throughout the pandemic, and so we'll see what they are seeing. I mean, that is an industry we know that has slowed down. I'm sorry, go ahead. You were going to say something.
No, I was going to say, and that's very interesting because I co-hosted with you once when he was on. He's a very interesting man.
Yeah.
we still have to get into these holidays like you spoke and like David was talking about. I mean, I want to see how we come out of the back end of Thanksgiving. I mean, Christmas legitimately for many, many people could be canceled this year in a real sense if the virus spreads after it does, after 2 weeks after Thanksgiving, as it did in Canada. There's no way, there's no real reason to believe it won't.
You took me exactly where I was going to go. The Canadian Thanksgiving. They saw, a jump in cases. We're going to talk with Janet Lauren of Bloomberg News a little bit later on about concerns about college kids coming home and spreading the virus that way as well. And we did get a big, big warning from the White House task force on the coronavirus yesterday. Dr. Fauci just, saying once again, we know you want to get together for the holidays, but kind of keep it small because this will really determine the course, the trajectory of those virus cases. And that ultimately then plays out certainly on people's lives, but also on the economy. Dave Wilson, what do you have coming up in the chart of the day?
Oh, taking a look at retail. Practically everywhere you look, you see companies beating analysts' earnings estimates for the third quarter, but you don't see their shares really being rewarded for that.
Okay, there you go. That's a tease. Guys, thank you so much. Really appreciate it and help setting the Bloomberg Business Week agenda on this Friday. Vince Signorella, have a great, great weekend. Global macro strategist at Bloomberg News on the phone in White Plains. And, of course, Dave Wilson, our stocks editor at Bloomberg News. He will be along later on with his chart and stock of the day. All right, what's coming up over the next 4 hours? Well, on the virus, you're going to hear some of my conversation from the Bloomberg New Economy Forum yesterday. I caught up with the CEO of Moderna, Stefan Bancel, Regina Dugan. She's the CEO of Wellcome Leap, also the chief epidemiologist at the Chinese Center for Disease Control and Prevention. I think I teased him yesterday. He's been described as the Anthony Fauci of China, Dr. Wu Zhunyou. You're going to hear a little clip of our conversation yesterday at the Bloomberg New Economy Forum. Also at the Bloomberg New Economy Forum, some tough words on how the U.S. needs to be with China. We heard that from former U.S. Secretary of State Henry Kissinger and from former U.S. Treasury Secretary Hank Paulson. With that in mind, Dan Blumenthal over at the American Enterprise Institute, he's got a new book out. It's called The China Nightmare, The Grand Ambitions of a Decaying State. So we're going to see what he has to say about what the new administration, what their relationship needs to be with China. We're going to get that gut check on the travel industry with Axel Heifer of Trivago. We've also got Dana Levin Robinson. She's the co-founder and CEO of Upfront. We're going to talk about transparency when it comes to daycare. Quick check on the Bloomberg Business Week Bite of the Day. One number that tells us a lot. It is $8 billion. Tesla's already impressive stock market rally might be on the verge of a further massive boost. The electric car maker's schedule of December 21 inclusion in the S&P 500 could result in $8 billion of demand from active U.S. large-cap mutual funds. So watch out for that. Let's get a check on world and national news. For that, it's over to Mark Mills. Hi, Mark.
Hello, Carol. Thank you. President Trump's fight to overturn the election has narrowed after 2 more legal defeats and a case withdrawal as states prepare to certify their results. U.S. District Judge Stephen Grimberg rejected a Trump suit that sought to prevent Georgia Secretary of State Brad Raffensperger from certifying the vote tally. Raffensperger today certified that President-elect Joe Biden is the winner of Georgia's 16 electoral votes.
The numbers reflect the verdict of the people, not a decision by the Secretary of State's office or of courts or of either campaigns.
Michigan's Republican legislative leaders plan to meet with Donald Trump at the White House today, despite a bipartisan outcry over the president's apparent push to overrule voters and award him the state's 16 electoral votes. More Republican senators are distancing themselves from President Donald Trump's attempts to reverse or discredit the outcome of the election. Senator Lamar Alexander of Tennessee said today that Joe Biden looks like he has a very good chance of being the next president and that he should no longer be denied resources that could help with an orderly transition. Food banks across the country are in critical state. ABC News talked to people at a food bank distribution center in Arlington, Texas, including disabled veteran Dwight Crownover.
Looking at the economy, looking at everybody not having a job, you can understand not having no food. It just makes the stress worse. So this here helps a whole lot.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
All right, Mark, thank you so much. You're listening to Bloomberg Business Week on this Friday. I'm Carol Massar. Joining me right now is Bloomberg News' Charlie Pellet. And Charlie, a couple stories on the virus that we need to bring out to everyone's attention. One has to do with, and I think the Connecticut Governor Ned Lamont was talking about this with David Weston, concerns about having enough staffing at hospitals. And this week, 1 in 5 American hospitals anticipated a critical staff shortage within 7 days. This is according to the U.S. Department of Health and Human Services. The ratio was a record as cases swell and patients fled facilities for a third time since the pandemic began. We know it's not good there.
Absolutely right, Carol. I read the story by our Nick Corello, and I came away with a reaction. Shocking, frustrating, and again, heartbreaking. I mean, you've got these healthcare professionals working so hard, and the risk now is that, number one, they're not going to have enough people. Number two, burnout. Number three, they cannot handle the patient load.
Right. This is why, you and I have talked about it all week long. It's just those concerns about when you start to see the cases go up, that it's a direct correlation. Then the hospitalizations go up, and then you quickly go from, we have a massive healthcare system that all of a sudden it is just overtaxed and overburdened. And, if you start to have healthcare workers too, who unfortunately are on the front line and most at risk here because of their potential exposure, if you start to then not have as many workers, then you're worried about them, but you're also then worried about having the sufficient care, really, for all of those COVID patients.
Indeed, and I heard a comment on our airwaves earlier today, possibly from the governor of New York, maybe the mayor, but it was talking about what's happening now is that in the early days of this crisis, when there were issues, when New York's hospitals were overwhelmed, we could find, if we were willing to pay, healthcare professionals from across the country. That's not the case now. They have got their own problems. They're facing their own issues, and they can't get help from elsewhere.
Yeah, exactly. This is why when we talk about aid, I mean, cities, especially those cities where they are hotspots, a lot of them have been on the East Coast, but we are, of course, now seeing it around the Midwest. This is why when we talk about aid from the federal government, why it is so crucial. Charlie Pellet, thank you so much. Really appreciate that. You're listening to Bloomberg Radio.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
At World Headquarters, I'm Charlie Pellet. Stocks are slipping as traders weigh a conflict between the White House and the Fed over emergency lending programs, along with assurances that the government's got plenty of room to help the economy. Right now, the S&P is lower, little change, down 9. That's a drop of about 0.2%. On track for a losing week. Looks like we're going to have a loss this week of roughly 0.3%, depending on how things shake out in the next couple of hours. We've got the 10-year, the yield of 0.82%. Gold is up 0.4%, 18.73 the ounce, and crude West Texas Intermediate up 1%, 42.18 a barrel. Again, recapping, equities are trading mixed. Nasdaq higher by 11, up 0.1%. S&P lower by 0.2%. The Dow is down 0.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. So a ton of virus headlines today. We had New Jersey's health commissioner saying she expects the state to get a COVID-19 vaccine in late December. We also had Roche being able to deliver its antibody treatments in the first quarter of 2021. We just talked about the strain on hospitals that we're seeing, the number of U.S. hospital beds occupied by COVID-19 patients rising this week to the highest since April. And if you look overseas, Canada, England, Austria, also seeing some stresses. It's been a rough day, a rough week when it comes to the virus. Joining us, as he always does every Friday, and grateful that he does, is Dr. Ian Lustbader. He is Clinical Associate Professor of Medicine at NYU Langone Medical Center. He is on the phone in New York City. Ian, good to have you back with us. How's it going?
Always a pleasure, Carol. Happy Friday.
Yeah, thank God.
Things are going okay. We're seeing a lot of regular patients and certainly a lot of COVID follow-up patients. The number of cases in New York so far is, or the number of hospitalizations, I should say, is not skyrocketing.
Yeah.
So I think based on antibody positivity, which is estimated about 20%, and kind of our rough go in March and April, although cases are up and hospitalizations are up, it's certainly not, thank goodness, overwhelming the system here. So I think the Midwest and out west is having definitely more of a challenge than we are, and we'll just have to see how we do with that.
What do you make, Dr. Lustbader, of kind of the rolling back? We're seeing it with New York City schools, sending kids back home to do virtual learning. We're starting to see rolling back in terms of the bars, but I still am surprised that things are even kind of open in that front. What makes sense to you? What doesn't? What needs to be done right now, in your view?
So I think part of that increased case positivity, which is really what they're basing, closing the schools on, may be incorrect or may be misleading. And I think every state has a different threshold. So it's not like there's a certain standard of when you need to think about doing these things and really how even effective they are. I think politicians sometimes feel they have to do something when really sometimes that thing is not really the best. We are doing a lot of testing. I'm seeing many of my patients are either visiting or potentially traveling or just curious, and so there are a large number of tests being ordered, either the swabs or the antigen tests. I'm seeing a lot of false positives. So initially someone may go for a nasal swab and antigen. We know no test is 100% accurate, and then they get a follow-up PCR test that's negative. So I think we have to be very careful with this positivity rate as a threshold. And I think the data about closing schools, and certainly elementary schools, really supports keeping them open for a variety of reasons, for the kids' education, for their mental health, for the parents' mental health. And so I think we are jumping the gun here incorrectly in closing schools. You could argue perhaps high schools where it does seem to be a little more communicable than the elementary schools. And I think the whole concept here of closing bars at 10 p.m. also is very, very confused. The virus doesn't say, "Oh, it's 9:59, I better go in." So, when you think about it, what we really want to do is discourage potential super spreader events like bars or gyms or where people are shouting, encourage people to sit outside. I think people can safely outside with heaters, eat and drink. And I think the schools should remain open unless there really is or an outbreak in that specific school of a higher number of cases. So I think it should really be individual.
What do you think about kids coming home from college for the holidays? Are you concerned? Because I'm sure you've been watching the numbers, and I know we report on it, but I feel like I want to know. It doesn't sound like we've had isolated cases of this school and that school, but for the most part, it seems like it's gone fairly well.
Yes, I think it varies from school to school. There are schools, University of Michigan, where they really did have to restrict any in-person classes because it was rampaging through the campus. Vanderbilt, under control, and that's not to point at one school or another. I mean, that could be based on a lot of factors, but those kids get tested on a weekly basis, and I think they have a much better handle on things. I do think, ideally, if kids can get tested in school before they come back, and if they're negative, I think that would be a lot more reassuring. We do anticipate a Thanksgiving bump based on traveling and kids coming back, families getting together. There is a risk, and we know the cases are increasing, and they're probably going to go up a little bit more within a week or two after Thanksgiving, just based on people returning home.
Yeah, exactly. No, it's it's interesting. I've been watching, kind of talking to different parents and what schools are doing, and I've been very lucky. My daughter's school, they kind of shut things down ahead of Thanksgiving and said, you're going to stay home for a week after Thanksgiving, and you're going to have to take a test before you come back. Because we all understand there are going to be people who are unfortunately going to still kind of get together en masse. One thing I want to ask you, and then we'll do a break and come back, but I got about 45 seconds. The task force, the White House Coronavirus Task Force, meeting again, making some comments. What was the significance of that in your view? I mean, important to keep America up to date, but I just wonder what your takeaway was.
I think it is important to try to answer questions. I know there was a little bit of a hullabaloo about announcements. Overall, I think we have positive information with the vaccines. I think there is still some questions, remdesivir and other issues that have come up, as outlined in Bloomberg. We can talk about that on the second part.
Good.
But I think updating people is good, but you have to do follow-up questions.
All right, and we are going to get into remdesivir. You set me up really, really nicely. We're going to come back with Dr. Ian Lustbader. He is Clinical Associate Professor of Medicine at NYU Langone Medical Center, joining us once again on the phone in New York City. And he's right. We had the World Health Organization coming out today recommending against using Gilead Sciences' remdesivir to treat hospitalized COVID-19 patients less than a month after U.S. regulators granted the drug a speedy approval. That is the world that we are living in when it comes to COVID. You are listening to Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week on this Friday. I'm Carol Masser, and we're going to dig into some of those headlines. Dr. Ian Lustbader, we'll get back to him over at NYU Langone, and especially about the latest development when it comes to remdesivir, which we know has been a treatment that's worked for some, but we'll get to that in just a moment. Right now, though, Charlie Pellet, what's going on?
As we're looking at a down day right now with the Dow, the S&P, they are both lower. Nasdaq is higher, on track for a losing week here. Stocks are slipping. Traders weighing a conflict between the White House and the Fed over emergency lending programs, along with assurances that the government's got plenty of room to help the economy. Treasury yields rose. The dollar held steady. Right now we have got the 10-year with a yield of 0.82%. Here are the equity numbers. S&P down 8 now. That is a drop of 0.2%. The Dow is lower by 139 points, down by about 0.5%, and Nasdaq up 19, higher by 0.2%. Gold up 0.4, 18.74 the ounce. West Texas Intermediate crude up 1%, 42.15 a barrel. Gilead Sciences shares lower after authorities advised against its remdesivir drug to treat COVID-19, a topic we'll have more on for you coming up in just a moment. Gilead shares lower now by 0.7%. Pfizer and BioNTech are requesting emergency authorization for their COVID vaccine, and it could take at least 3 weeks for the Food and Drug Administration to decide, as trial data is probed by agency staff and outside advisors. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
This will be important because we'll also see some of the additional data that hasn't been released yet in terms of safety, as well as the efficacy data that they've sent some press releases out on. Completely expected. It'll be really important for us to go through the safety data to make sure that there are no signatures there of anything that could be of concern. But certainly everything that's been talked about from the Pfizer and the Moderna vaccine as well up to date has been very positive and leaves me optimistic about this vaccine coming down the pipeline.
And indeed, Pfizer shares are higher now by 1.7%. He mentioned Moderna up now by 5.1%. BioNTech shares, they are surging 8.24%. Again, recapping, equities are trading mixed. S&P down 7, a drop now of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Let's get right back to Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, still with us on the phone in New York City. So, Ian, what's up with remdesivir? I thought this was like a productive treatment.
Well, in medicine, there are often conflicting or confusing results, and depending on how you slice the data, you can sometimes get, confusing results. And I think with remdesivir, we always knew that this was not the most potent antiviral. It was sort of the only tool in the toolkit, and typically it's used in a combination of hospitalized patients. So remdesivir was never really used for an outpatient. There is a new monoclonal antibody by Lilly that's coming out, that's been approved, that may be very effective sort of as a gap for outpatient use in a certain segment of patients. But remdesivir has always been used for inpatients, and typically it does show some benefit when combined with steroids and the sort of cocktail that patients have been getting when they come in, including some blood thinners. So this is really for people who are sick enough to be admitted. But certainly when looked at alone, we know that it's not the strongest, and depending on when it's given, is it better early on, is it better later on, and so forth, I think there's conflicting data, and I'm not surprised that some studies at least show that it is not significantly effective. And I think it's going to be up to the individual hospitals to decide, is this worth the cost? In other words, there's a certain cost for the medication, and are the doctors seeing enough of a response to warrant it?
Yeah, exactly. Well, it's interesting. So, what do you make too of everything that we've gotten? You know, you and I have talked already about Pfizer news. We got a little bit more Pfizer news about, planning to apply for emergency use. Moderna also coming out. That is something that doesn't require the extreme refrigeration. I talked with the Moderna CEO, Stefan Bancel, yesterday. So, I don't know. How do you see it? We're making progress, right?
Absolutely. So on our segment several weeks ago, I had reported, that the preliminary data looked very good for both Pfizer, Moderna, the mRNA vaccines. The data showed very high antibody responses and T cell responses. AstraZeneca. So I think our listeners certainly are not surprised by this news because we announced early on before it was released that there was certainly encouraging data. And so I think we're going to have several vaccines, all of which appear to be safe, all of which appear to be effective, not 100%. And again, there's individual risk, and until those vaccines are given out, and even after those vaccines are given out, it's not going to be 100%. And people who are still at risk, and we've talked about this, lung disease, diabetes, hypertension, obesity. People at risk still need to be careful until we develop enough herd immunity that there are really very few cases, and that may take a while. But I think we've definitely turned the corner. I think there's more good news coming with other vaccines. There's some good news about outpatient monoclonal antibody to spike protein. All of this is expensive. This is not all going to be available for the Thanksgiving weekend. So people do need to be smart and careful. But I do think in the next few months we will see significant improvement. Unfortunately, we'll be up to, 300,000 deaths and hospitals being overwhelmed. So this has been a rough pandemic. It's not over. There's definitely light at the end of the tunnel. So we have to be very careful until we're really able to, distribute all of this, which is still really several months away.
Well, and what's interesting, and I'm glad you said that because we heard it from Anthony Fauci and the task force yesterday. I said I interviewed someone who is called the Dr. Anthony Fauci of China, Dr. Wu Zhunyou. He's the chief epidemiologist at the Chinese Center for Disease Control and Prevention. Caught up with him. He too, many people are like, listen, guys, vaccine, it's not going to be here tomorrow. It's and especially when you think about mass distribution, and that in the meantime, it may not be the answer to everything, and that in the meantime, wear masks, social distancing, avoid those big gatherings. It really does come down to that. I know you and I have talked about it so many times,
100%.
but that's just quickly, that's what it's about.
We absolutely have to be self-aware and be careful until everyone gets the vaccine, and we have to encourage people to do that when it comes out.
Ian, I got to run because the president's coming out to talk about drug pricing. He is at the White House. Let's go there.
Rules to very dramatically lower the price of prescription drugs for the American people, especially for our cherished seniors. We're pleased to be joined on this occasion by Secretary of Health and Human Services Alex Azar and Administrator of Center for Medicare and Medicaid Services, Seema Verma. Thank you both. Thank you both. And thank you all for being here. Appreciate it. The unprecedented reforms we're completing today are the direct result of the historic drug pricing executive orders I signed in July. Statutorily, we had to go through a very long process, and we got it done. I was very proud to have gotten this done. We were pushing it very hard, as we did with the vaccines and other things. The first action will save American seniors billions of dollars by preventing middlemen, famous middlemen they call them, from ripping off Medicare patients with high prescription prices. Currently, drug companies provide large discounts on the price of prescription medicines, including nearly $40 billion in rebates to Medicare Part D plans last year alone. Yet often middlemen stop those discounts from going to the patients, which is what we're interested in, not the middlemen who need it the most. So the patients are going to be now getting the benefit instead of these very wealthy individuals. Patients pay very high prices, and they have for many years, although we brought it down, first time in 51 years, with the costs adding up to hundreds or even thousands of dollars per year per patient. Today's action ends this injustice and requires that these discounts go directly to people. These are the people that need it. This will save patients up to 30%, could be 40%, could be 50%, could be much higher than that. These are numbers that nobody's ever even contemplated. And that doesn't include life-saving drugs like insulin, which will be even higher. Insulin was destroying lives and destroying families because the cost was so high, and now it's at a level that nobody can even believe. Is that correct, Seema? $35 a month, from many times that number. The second rule we're finalizing today will transform the way the U.S. government pays for drugs to end global freeloading on the backs of American citizens and American patients. Until now, Americans have often been charged more than twice as much for the exact same drug as other medically advanced countries. We would be having a drug, identical drug, same company, and we'd pay many times the price of what that drug would sell for in certain countries. In case after case, our citizens pay massively higher prices than other nations pay for the same exact pill from the same factory, effectively subsidizing socialism aboard with skyrocketing prices at home. So we would spend tremendous amounts of money in order to provide inexpensive drugs to another country. And when I say the price is different, you can see some examples where the price is beyond anything 4 times, 5 times different. For example, Medicare Part B recipients are forced to spend 5 times more for a common breast cancer medication than patients in other countries. So 5 times more. And we have other examples that are substantially higher than that. To address this unfairness and to lower prices for Americans, we're finalizing the most favored nation rule. Remember that name, most favored nation rule. Nobody's ever done this. The drug companies don't like me too much, but we had to do it. It took a long time before we were able to do this because statutorily we had to go through a process. But there'll never be anything like this. I just hope they keep it. I hope they have the courage to keep it because the powerful drug lobby, Big Pharma, is putting pressure on people like you wouldn't believe. Medicare will now look at the price that other developed nations pay for their drugs, and instead of paying the highest price on the list, and we are substantially higher than any other country in the world, we will pay the lowest price. In other words, we take the lowest price and we match whatever the lowest price is, leading to colossal savings for all Americans. And we're talking about savings of 50, 60, 70%, 80%. Different drugs, different prices. In addition, today, we're taking one more historic action to hold down drug prices. In the past, drug companies have been allowed to identify certain very old generic drugs that have been widely available for decades and exploit a misguided program called Unapproved Drugs Initiative. That's Unapproved Drugs Initiative, a program that has been around for a long time and hasn't been too good for the people that were supposed to benefit to obtain market exclusivity on these medicines. So we are doing something that nobody thought anybody would do. The savings is going to be incredible. Then they've jacked up the prices by as much as 1,000 to 5,000% on this product. This program has also caused shortages of important medicines. Today I'm announcing that we are ending the Unapproved Drugs Initiative program to stop this unfair practice. So prices are lifted by 1,000% to 5,000%, in 1 or 2 cases even more than that. And we're ending this. We are putting an end to it. Together, these reforms will save American patients many, many billions of dollars every single year. For generations, the American people have been abused by Big Pharma and their army of lawyers, lobbyists, and bought and paid for politicians. But I've been loyal to the special interests. I've been loyal to our patients and our people that need drugs, prescription drugs, and devoted myself to completely fighting for the American people. You see that? This is not an easy thing to do. Big Pharma ran millions of dollars of negative advertisements against me during the campaign, which I won, by the way, but, you know, we'll find that out. Almost 74 million votes. We had Big Pharma against us. We had the media against us. We had big tech against us. We had a lot of dishonesty against us. But Big Pharma alone ran millions and millions of dollars in ads. In fact, I looked at it. I said, who is it? I've never seen anything quite like it, because I told them I'm going to have to do this. You know, I was put here to do a job. And Pfizer and others were way ahead on vaccines. You wouldn't have a vaccine if it weren't for me for another 4 years, because FDA would have never been able to do what they did, what I forced them to do. And Pfizer and others even decided to not assess the results of their vaccine. In other words, not come out with a vaccine until just after the election. That's because of what I did with favored nations and these other elements, instead of their original plan to assess the data in October. So they were going to come out in October, but they decided to delay it because of what I'm doing, which is fine with me, because frankly, this is just a very big thing. A very big thing. What I'm doing here, I don't know if anyone's going to appreciate it. These people can't even believe it. Alex, even you can't believe it, can you? Look at you. So they waited and waited and waited, and they thought they'd come out with it a few days after the election. And it would have probably had an impact. Who knows? Maybe it wouldn't have. I'm sure they would have found the ballot someplace, the Democrats and the group. These corrupt games will not deter us from doing what is right for the American people, and I will always put American patients first. And I think it can never be shown better than what I'm doing today. Already we successfully lowered drug prices for the first time in 51 years. In September, we finalized a rule allowing states, wholesalers, and pharmacies to safely and legally import drugs from Canada. Career politicians have promised to institute this reform for decades, and we got it done. The reason Canada, and this is going to be, I think, just a short-term fix, because until we have the favored nations fully ready, which we hope to be in January 1st. I think a very important thing is to say January 1st. It's right around the corner. But I'm giving governors the right to go to Canada, because they'll pay approximately 50% less for their drugs that they buy for their states. So the governors buying drugs for their states go to Canada. They buy the drugs for very, very much less, and they'll be able to pass that on to the people of Florida. Ron DeSantis was the first one to ask, but others are asking also. And it's a great thing. I mean, you'll save 50%. They're going to buy a lot from Canada initially, and I think ultimately they'll be comparing prices. You'll get the lowest price anywhere in the world, so you won't need to buy from Canada. In a few weeks, my administration will also finalize rules requiring federally funded health centers to pass drug company discounts on insulin and EpiPens directly to patients, and the EpiPen prices come way down. We remember those horrible stories about EpiPen. Well, the prices now come way, way, way down. We capped insulin costs for many seniors at just $35 a month, as I said, saving them an average of nearly $500 to $1,000 a year just on insulin. Saving $1,000 a year on insulin. Since I took office, we've reduced Medicare Part D premiums by 12%, putting nearly $2 billion back into seniors' pockets. Now, 12% is great by any standard, but 12% is peanuts compared to what we've done with favored nations. I think it's probably the biggest story that we've ever had relative to drug prices. There's never been anything like this. This is something that has been talked about for many years, but nobody had the courage to do it because of the power of Big Pharma. We ended the gag clauses that prevented pharmacists from telling patients how to buy less expensive drugs. As you know, pharmacists could not talk to patients about how to buy drugs. How about that one? Think that's right? And now they can and should. We approved a record number of affordable generic drugs for 3 years in a row, and we put a very heavy emphasis on generic drugs. And the pricing there has become very good, but that pricing will also go down very substantially. No administration has ever fought harder or achieved more for our patients and for our seniors. But for America, when you think of it, for America, because other countries were paying a fraction of what we were paying. in some cases, a small fraction. I mean, it was what the numbers were just staggering. The difference between going to, I won't name nations, but I could name 5 of them right off the top of my head, that it is so incredible to think about for years what was happening. We've been working on this for 2 years. Statutorily, we had to go through a process. But when you think that our nation, for the exact same pill out of the exact same box, often made in the exact same factory, same company, and you take a look at the cost was so much more, many, many times more. In 4 short years, we've instituted the most dramatic series of drug pricing reforms in decades, and you'll see that it all comes to fruition right now, starting on January 1st, and the American people will benefit from our actions for many, many decades, and it should be very immediate. Now, I presume they'll sue, but it's a suit that they should never be able to win. They should never, ever be able to win. So now I'd like to ask Secretary Azar to provide some more details as to the action, and then Seema, I'd like to have you come up and say a few words, and great job. We appreciate it. Thank you, Secretary.
All right, you've been listening to President Trump. He is in the White House at the Roosevelt Room and talking about his or his initiatives, I should say, for lowering drug prices specifically. He really says he is getting at the variations paid for drugs by Americans versus those that are in other countries. So he talked about, and this has been very controversial when it comes to the drug industry, and that is the most favored nation status. And so essentially he says Medicare is going to now look at the prices that others developed nations pay, and that they, meaning the United States, we will now pay the lowest price. So talking a lot about the drug industry. Lucky for us, I think Dr. Ian Lustbader is still with us, Clinical Associate Professor of Medicine at NYU Langone Medical Center. So Ian, we do know that the president, I think over this summer, he actually signed 4 executive orders that were aimed at lowering drug prices. The pharmaceutical industry is not too happy about some of them. He also talked about ending the unapproved drug initiative. That's for those pharmaceuticals. There's hundreds of them that entered the market prior to 1938 before the FDA really implemented those safety reviews. So what's your takeaway from what the president said?
Well, I think the president raises a number of very correct points. You know, for years we've known that Americans have always paid more for the exact same medications that are available, you know, more cheaply overseas. And it's very opaque how the drug companies determine prices from country to country. And you and I, even a couple of years ago, interviewed a pharmaceutical CEO trying to get a sense about how do you even judge how to charge a certain cost, and we never got a straight answer. You know, part of that, obviously, are regulations. It costs a lot to bring a new drug to market. FDA regulations and studies, you know, it can cost billions of dollars to bring a new medication. But there's something very amiss when Americans have to pay more. And so I agree with the president, you know, on this. And, you know, obviously pharmaceutical companies need to make a reasonable profit. You know, how we determine that is really another question.
How much, and I'm always curious about this, people always make the argument, I've had a brother who worked in the pharmaceutical industry for several decades, and what's interesting is they say, yep, it's the R&D, the amount of time they spend on a lot of drugs that never actually come to market. There's also the concerns about legal liabilities. Is that part of the reason why it's so much more expensive in the U.S. versus elsewhere?
I believe that's true. Certainly, litigation, not only for malpractice, but for pharmaceutical issues, much more in the United States. So I'm sure that is a factor. But really, at the end of the day, it's just patently unfair that one customer should have to pay significantly more, 2, 3, 4, 5 times as much. And maybe that burden needs to be shared around the world as well. I think it's long overdue that the question is addressed why Americans have always had to pay more. And for medications that are generic, whether it's insulin or other generic medications, drug companies can basically charge whatever the market will bear, and that may not be appropriate. We may just need to say some things are healthcare issues. If you want to pay more for a Cadillac or whatever brand, go right ahead. That's a luxury. But for essential medications, we probably should be making them in the United States and be, regulating how much can be charged for them.
Hey, just very, very quickly, 30 seconds. The PBMs, the pharmaceutical, the pharmacy benefit managers, have they made this situation worse? Just quickly.
It's another layer and it's unclear exactly what they do. Theoretically, they're supposed to negotiate the best price. Unclear if that really happens.
All right. Always, always great. And double duty. Talking about COVID, talking about drug prices. Ian, you can do it all. Thank you so much. Have a safe weekend, a good weekend, and then we will talk to you again next week. Really appreciate it. Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, joining us on the phone in New York City. And again, we just did hear from President Donald Trump at the White House talking about lower drug pricing for Americans, talking about most favored nation status, and talking about now where Americans, the goal is to pay the lowest price that is paid for a drug around the world. All right, coming up, don't forget, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week. We're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business. That's coming up next.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Friday, November 20th. It is a mixed Friday. The Dow, the S&P, they are both lower. Nasdaq is higher. Pfizer makes it official moments ago, announcing it has filed with American regulators for an emergency use authorization of its COVID-19 vaccine, seeking clearance for an experimental shot that is expected to play an important role in an immunization effort to halt the virus. Pfizer shares are up now by 1.5%. Stocks are slipping today as traders weigh a conflict between the White House and the Federal Reserve over emergency lending programs, along with assurances that the government has plenty of room to help the economy. The S&P 500 index is down 8 points. That is a drop now of just about 0.3%. Dow Industrials down 134, lower by 0.5%. And the 10-year, the yield there 0.82%. So again, the S&P down 9, down 0.3%. Nasdaq up 0.1%, higher by 12 now, and the Dow down 135, down 0.5%. Gold up 0.4%, 1873 the ounce. West Texas Intermediate crude up 1%, 42.15 a barrel. Wall Street, meanwhile, is looking ahead to the December Fed meeting. Nisha Patel is portfolio manager at Parametric Portfolio Associates.
I think in the December meeting, the Fed is really going to emphasize and maybe focus on two things. Really emphasizing that they're going to keep rates at close to zero for an extended period of time, really provide that dovish guidance. And again, in light of the new developments, in light of the weaker data, in light of the shutdowns, and let's be honest, without fiscal stimulus, there's more pressure on the Fed to do something. And so I think they will have to address that.
Sources tell Bloomberg Europe's aviation safety regulator is preparing to take a major step toward approving the return of Boeing's 737 MAX as soon as next week. Boeing shares, they're down today by 2.2%. Again, recapping, equities are trading mixed. The Dow, the S&P, they are both lower. Nasdaq is higher. S&P down 9, a drop of 0.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Yes, indeed. This is Bloomberg Business Week, the Friday edition. I'm Carol Masser, working from home on this Friday. Want to get into something. It was all over Bloomberg Radio today. We were talking about it too yesterday as well. And I'm considering it. It's a top story, no doubt about it. And it's about the battle between Mnuchin and Powell, or at least the apparent battle. We're talking about U.S. Treasury Secretary Steven Mnuchin and also Chairman of the Fed, Jay Powell, of course. It's over the emergency lending programs and aid to help the economy. So let's get into it with Saleha Moshin. She is senior U.S. Treasury reporter at Bloomberg News. She is on the phone from Washington, D.C. So Saleha, lay it out for us. We kicked off our broadcast today. And our Vince Signorella said, it's not really a spat in that, Mnuchin has a point here. We could use this money to help out small businesses, other businesses. So what are you seeing?
Well, not only does Mnuchin have a point here, he is following the law, which we have seen on paper since March, that lawmakers agreed to. Single senator voted in support of the CARES Act in March. Every single senator should have read every single line of the act that they supported. And so it said we will be sunsetting these facilities at the end of the year. Now, when the law was passed, it looked like this was just an 8-week problem. It didn't seem like this pandemic was going to go on for as long as it did.
Right.
But the spat kind of happens when it's the central bank itself issues minutes a unhappy message in response.
Well, so what are you hearing? Who's right? Is there a right or wrong here?
I think it's also how you give information. Maybe if the secretary had prepared the landscape starting in September, before Election Day, before all the polls were so set on who was going to win, who was going to lose, and said that everyone should just be aware that this is what the law says, and then we got to look at it and tick all of our boxes, then maybe this information, this message would have been received a little bit with less shock.
Yeah.
That's a real big part of it. But markets have absorbed the message. Markets have recovered.
Yeah.
S&P 500 is relatively flat this morning after a lot of the news kind of came out. So.
Well, and Saleha, you understand how this all works. I mean, is it the right of the Treasury Secretary to request this money back? And can he do it? Will it happen? Did it happen?
Well, Yeah, I don't know if it will. It should. He does have a right to, because Congress said that he needs to do this. He did point out that in March, when the $500 billion was being given to Treasury, the Democrats were saying that Mnuchin was going to abuse it as a slush fund for himself. And today, criticism is sort of bipartisan. All Democrats are unhappy that Mnuchin wants to return the money to Congress, and all Republicans are happy that he's doing it. I think this is also just a part and parcel that, Congress just cannot agree to a stimulus, so maybe the Secretary is trying to find a way to make that happen.
Right.
At the same time, you can understand the Fed is in a bind already. Their toolkit is, rates are historically low for a long time. They've expended a lot of energy on loosening the financial conditions. You don't know where we're headed next. So I can understand that this is a bit of a shock to people.
Well, and it's a reminder, Saleha, listen, you understand it. You follow the Treasury. You understand how the government works, right? And the Fed is about really kind of working with making it kind of easier for lending to happen within our economy. Congress is about spending money, right? Or giving money to Americans or to small businesses. And essentially, this money could go into another round of stimulus and help out, some of those small businesses, the, PP money that we saw going out in that first wave of stimulus, virus stimulus.
Yeah, we haven't seen another wave. The Federal Reserve has been pleading for more fiscal stimulus. You have very direct comments from Chair Powell and his colleagues that it is absolutely essential to have more. And it seems like Congress just has not really understood that message.
So what happens? Tell me what's expected. Here we are. We're just, a little less than a week out from Thanksgiving. We've got, Congress, in terms of recesses coming up over the holidays. What are we anticipating in some kind of relief, package, another round of relief? We know that Secretary of the Treasury, Mnuchin, he did kind of take some steps, right, to restart these stimulus talks, and he was talking with Democratic leaders about it.
Well, he hasn't spoken to them yet since elections about this.
Okay.
So today he spoke to Senator Mitch McConnell, who is supporting the idea that we should use the unspent CARES Act money that's already been appropriated and sort of siphoned off to spend to go ahead and find ways to use it for targeted relief in the economy. And so now they need to approach congressional leaders. Now there's not very many vote days on the calendar between now and the end of the year. At the same time, these facilities, they sunset at the end of this year, and it's just 15 or so trading days before the next administration is sworn in. So, work can happen pretty quickly.
Yeah, exactly. But each day that goes by, we know it's putting more pressure, especially if you watch those virus numbers, it's putting more pressure on businesses going forward. Saleha, is there some understanding that we will get something at some point, but the real sticking point now is just whether McConnell has repeatedly, I know you and Eric Wasson have done reporting, talked about, $500 billion. We know the Democrats have talked about $1.4 trillion or even more. Can we expect that there will ultimately be something done? It's just a matter of how big and the timing?
We just can't bank on that. You would have thought this would have happened back in July or August. What is to say that they're going to do this during the lame duck period of the session? Especially now that Republicans who have been so shy to do more spending are saying that, well, there's a vaccine now, so maybe we need to wait and see what more or if anything more is necessary. It's anyone's guess. It's a coin flip almost whether something is going to happen or not.
All right, Saleha Mohsen, you understand the Treasury Department. You understand Stephen Mnuchin. You cover him. We've just got about 40 seconds left here. Does he understand the difference between watching Wall Street and what that tells us about one thing about, Wall Street is not the economy. Does he understand the distinction and understand the need for more aid? Just quickly.
I really do think so. He has been saying it vociferously since July that more fiscal relief is needed, and he does know that stock markets go up, they go down, but in the end, it's the economy that needs to be underpinning that market increase.
I think he might be working during the holidays. I'm just going to put it out there. Saleha, thank you so much. Love your reporting, and thank you so much for getting up to date on what really is a top story on this Friday. Saleha Mohsen, she is Senior U.S. Treasury Reporter at Bloomberg News, joining us on the phone from the nation's capital. Time for another check on world and national news. For that, over to Mark Mills. Hey, Mark.
Hey, Carol, thanks. Pfizer has filed with U.S. regulators for an emergency use authorization for its COVID-19 vaccine. seeking clearance for an experimental shot that's expected to play a vital role in an immunization effort to halt the virus. Michigan's Republican legislative leaders plan to meet with President Trump at the White House today, despite a bipartisan outcry over the president's apparent push to get the state's lawmakers to overrule voters and award him the state's electoral college votes. Biden campaign senior advisor Bob Bauer says President Trump is asking Michigan to ignore the results of the popular vote election, something he called a threat to democracy.
No state legislature in our country's history ever has done what Donald Trump is apparently agitating for the Michigan state legislature to do.
Critics of Trump's Michigan effort say that even if the state lawmakers are able to pass legislation to overturn the election results, they don't have the number to override an expected veto by Democratic Governor Gretchen Whitmer. More Republicans are distancing themselves from President Trump's efforts to discredit the election. Bloomberg's Nathan Hager reports from Washington.
Utah Senator Mitt Romney has delivered the most forceful response. He says President Trump is attempting to subvert the will of the people with unfounded fraud claims. Another Republican senator, Lamar Alexander, says President-elect Biden looks like he has a very good chance of being the next president and should no longer be denied resources needed for the transition. Republican Congressman Fred Upton of Michigan says any attempt by his state's legislature to change the election result would be a dead end. He says he's not seen any evidence of fraud that would overturn more than 150,000 votes. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Quick Take by Bloomberg. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
All right, Mark, thank you so much. You're listening to Bloomberg Business Week on this Friday. I'm Carol Masser. Joining me right now is Bloomberg News' Charlie, excuse me, Pellet.
That's a nickname. Pellet.
You didn't know, right?
No, I'm going to call you Carol Muse Masser because that's where we're going with music.
Well, let's talk about this. I
Well,
love
let's
this story by Amanda Gordon. I love everything she does because she is got a front row seat to the city, the world's billionaires, and she's always on the New York social scene. And that includes catching up with Alex Klaban, who recently left a hedge fund he started back in 2008. And he's got a forecast for what follows the chaos of the pandemic, Charlie.
Indeed. He says, quote, "The world's crazy. The pandemic has caused us all to scatter. And if there's one thing that we're all yearning for, it is calming music in a place that we can convene." Now, I'm not going to comment on stories, but in this case, I'll make an exception. Amen to Mr. Klaban.
Woohoo, I agree with you. And he goes, that's why I'm super bullish when COVID passes and the new David Geffen Hall gets reconstructed. He's talking about the Philharmonic in New York City. And so it's really just fascinating. He's helping out the Philharmonic. We know, like all of the cultural institutions in New York City, which the city is so well known for, they have been hit so hard by the virus. It's canceled about 18 months of performances, the longest hiatus in its 178-year history, $30 million in lost revenue. So he's trying to help them out.
Indeed. For all of these things that we talk about doing online, there is nothing that beats live music, no matter what your taste, no matter what your venue. But we got to have that back. That's why I'm in New York.
I know. Listen, the Philharmonic, they did their first virtual gala. He and his wife featured it as its honorees. And you had Kelly O'Hara, Josh Groban singing. So it's pretty interesting how, cultural organizations we know too are figuring out how to pivot. We've talked with the head of New York City Broadway, and we know it's really hard to do that and bring that back. But it's interesting to see how some folks are figuring it out, just like Alex Klaban is. All right, Charlie, thank you so much. You're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Late session fade. We've got stocks at the worst level of the day right now. The Dow, the S&P, and now Nasdaq all trading lower. What's going on? Let's get the answers. We head right over to the First Word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks fading right now in the red. Dow's currently down 226 points. S&P's dropped 19. Nasdaq is lower by 20. The U.S. 10 yield at 0.83%. Oil is up 1%. Gold gains 7. And transports drop 80 points. Among the main 11 S&P sectors, only utilities were in the green. Financials led to the downside. And in the Dow, only Nike, 3M, and Procter & Gamble gained, while Boeing, American Express were under pressure. And after earnings, Foot Locker fell 5%. In other news, Pfizer has filed their vaccine for emergency authorization with the FDA. Trump says he's giving governors the right to go to Canada to buy drugs. And Boeing's 737 MAX is nearing critical approval from EU regulators. Wrapping things up, Charlie, have a great weekend.
You too, sir. I appreciate it. Thank you so much.
News desk.
All right, thank you, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
He wasn't done yet, Charlie.
He wasn't. He had a lot to say, but these markets, Carol, unbelievable. Look at where we're going right now on the S&P in 42 minutes to go.
I know. It's like been crazy, some of these trades that we have been seeing, certainly on any given day. All right, Charlie, looking forward to counting down with you to the closing bell. But again, as Charlie said, another leg down here. All right, you are listening to Bloomberg Business Week, and this is Bloomberg. So, Charlie, speaking of Charlie Pellet, we talked about these stories this week. It's about how Joe Biden's election will undoubtedly come as a relief for international students. And then we also talked about keeping grandma safe as college kids head home for the holidays, covering it all for us, as she always does when it comes to colleges and universities. Bloomberg News higher education finance reporter Janet Lawrence. She is on the phone in New York City. Janet, good to have you here. A great duo of stories. So let's talk about Joe Biden specifically. International students, they've got to be hopeful about a new administration come January.
Yes, that is true. They have seen a lot of discord in the Trump administration and proposals lobbed at them directly. Just this summer, we saw several that were concerning to them, including whether or not they would have to be deported if their universities pivoted online, which we actually did see very early on in August. And and of course, that was dropped after Harvard, MIT, and dozens of colleges and others sued. Another proposal was to limit their length of stay. There's been proposals about H-1B visas, hiring skilled workers from abroad. And now that the Trump administration will be ending in January, of course, there's a sigh of relief from universities who often depend on international students to pay the full price. But the question is, will they want to return, given the years of unwelcoming policies and rhetoric towards immigrants under the Trump administration? And we spoke to some MBA programs, and one really stood out, the University of Toronto, which also had an increase in international students at the expense of probably some U.S. schools over the years. And I spoke to one student who is from Vietnam. She earned a college degree in the U.S. She earned a master's degree in the U.S. She went home to Vietnam, and when she was considering MBA programs, she didn't even bother applying to U.S. schools. She went to the University of Toronto. And as she said, Canada is a country that applauds international diversity. Compared to the U.S., Canada has become more and more welcoming. So given the idea that other countries, especially Canada, have been courting international students now for years, and that other universities within their home countries have gotten better over time, it's not a slam dunk to have these international students return. And given the pandemic, where there's been a sharp drop in international students,
right?
We will have to wait and see, but it could mean a lot of money to U.S. universities.
Well, it's interesting, and you include this in your story. According to a Bloomberg Business Week Best B Schools analysis, this is something the Business Week is really well known for, is their analysis and tracking of business schools around the globe. But their analysis of the magazine's top 20 U.S. schools, foreign students making up 29.5% of the class that began at elite schools in August or September, down from almost 35% 2 years ago. You know, it's interesting. I think about the broadcast that we did in honor of the Columbia Business School, one of the top-ranked schools, business schools by Bloomberg Businessweek magazine. James Gorman, we caught up with, you know, from Australia. He's now a U.S. citizen, but talked about coming to the United States, coming to New York, what that was like. And then the conversations that he had, he said, with a very eclectic and international student body. So this is important to the schools, kind of their culture.
Yes, and of course, in addition to the revenue, they bring a diversity of ideas and thought. And employers love to hire international graduates from U.S. business programs because when they want to immediately put people around the world, it's not an issue for international students because they already have a lot of experience living abroad. So it's going to see. We'll have to see what happens because there's other choices. Of course, with the pandemic, there's already been a sharp curtailing of international students, and we'll just have to wait and see.
All right, so Charlie and I had some fun with this yesterday, Janet. To be fair, Charlie playing Grandma got run over by a reindeer. Grandma has enough problems around the holiday season, right, that they don't have to worry about or shouldn't have to worry about their college grandkids coming home and infecting them with COVID. You wrote about this.
Yes. In fact, the University of Arkansas's football coach even made a video telling students to mask up, get tested now, and protect your family and friends. Let's make sure we keep Grandma safe at Thanksgiving. And the University of Arkansas is one of a very handful of colleges that are actually allowing kids to come back after Thanksgiving. So the question
might take a while for them to warm up back to U.S. colleges and universities. Just quickly.
We'll be getting some application data in the next couple of months, and we'll have a better sense. But, of course, it's always also going to depend on any travel restrictions.
Yeah, all right. There's still that to think about. All right, Janet, always great to check in with you. A couple great stories. Check her out on Twitter, at Janet Lauren. Of course, Janet Lauren, our higher education finance reporter at Bloomberg News, with us once again on the phone from New York City. You're listening to Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. It's the Friday edition. I'm Carol Massar. Coming up, yeah, you know what's coming up. It's one of our favorite points of the day. We're talking about Dave Wilson and his chart of the day, and there's a little song that comes along with it. We'll get to that in just a moment. First up, though, back to Charlie Pellet. 29 minutes to go.
Indeed.
You love the song. Right, who doesn't?
What's that? This magic moment? No. I love the song of the day. Here's what's going on. We've got the Dow, the S&P, and Nasdaq. They are all very much in retreat right now. Just a slight bounce off the bottom as I pull up the GIP chart on the Bloomberg here for the S&P 500 index. But it is a down day, and to underscore, very close to the worst level of the day. Stocks are slumping. Traders weighing a conflict between the White House and the Federal Reserve over emergency lending programs, along with assurances that the government has plenty of room to help the economy. Right to the numbers now. S&P's down 20. That is a drop of just about 0.6%. The Nasdaq Composite Index down 26, down 0.2%. Nasdaq 100 Index slumping by 0.4%. The Dow is down 215, down 0.7. Dow Transports down by 1%. The 10-year yield 0.82%. Gold is up 0.3%, 18.72 the ounce. West Texas Intermediate crude right now up by 1% at 42.15 a barrel. Johnson & Johnson has persuaded a New York judge to slash by about 2/3 a $325 million jury award to a woman who blamed her asbestos-related cancer on use of the company's baby powder. Johnson & Johnson J&J down by 0.6%. After earnings, Foot Locker shares, they're slumping 5% also after earnings. Williams-Sonoma up now by 5%. Recapping equities lower, S&P down 19. 12:33, actually 3:33 on Wall Street. Time now for the Small Business Report with John Tucker.
Amelia Seha joined her dad picking grapes in California's vineyards. She looked up at her migrant worker father and vowed she'd go from picking grapes to owning a vineyard one day. That day actually came in 1999 when she became the first Mexican-American woman to launch her own wine business in California. Well, she's endured over the years racism, earthquakes, just avoided wildfires, and now, of course, coping with the pandemic. Can you tell us how Seha Vineyards endures in Napa, California?
Well, when the pandemic started, all restaurants and wine tasting rooms had to close, and we closed our tasting rooms on March 15th, and we were only finally able to reopen early July. So it cut the channel of sales dramatically because we sell most of our wine direct to consumers that visit our tasting room. We needed to remain relevant with wine-loving fans across the country, so we actually launched a live stream show titled on Tuesdays, Taco Tuesday, Vino y Más, Wine and More.
Has the pivot that you made as a small business owner been enough to make up for the fall off in revenue following the closures of the tasting room?
We're a little bit short of our projected sales, but due to our quick response, we've been able to continue to sell our wines. Plus, we also have a wine club, and that has helped a lot too.
Do you have any further guidance on what is next for the state of California in terms of lockdowns?
We don't know yet, but we may have to close our wine tasting room again.
Amelia Seha of Seha Vineyards in California. And that is today's Bloomberg Small Business Report.
Okay, we thank you very much, John Tucker. And at 3:35 on Wall Street, I'm Charlie Pellet. That is a Bloomberg Business Flash.
I think after something like that, Charlie, we both need a glass of wine. Right?
I'm all in favor of that. Yep, makes sense for me on a Friday after what a week, too.
I know. All right, kiddo, hang in. Just a few more hours to go. All right, you are listening to Bloomberg. I'm not sure. I'm thinking like 60s, going back to the 60s or 70s, Dave Wilson?
Yeah, 70s rather than 60s.
Is it male or female? Forgive me.
Well, the leader of the band is male. singer's a male. So, in fact, I think the rest of the band is too.
Okay, so that means male. I'm really not sure. Who is it?
That would be the Jeff Beck Group.
Oh, nicely done.
Going down.
Okay, yeah, back in the 60s, though, right?
That particular song is from 1972.
Oh, okay.
But the band itself, they did 4 albums starting in the late 60s. And the singer on that particular song, actually the 3rd and 4th albums, was a guy named Bobby Tench. You know who sang on the first 2 albums?
Clapton?
Oh,
was it Clapton?
You know the singer. Huh?
Was it Clapton?
No, but you're in that era.
Winwood?
No.
You're killing me, kiddo.
Yeah, well.
Who?
How about Rod Stewart?
Oh, my God, no. How great is that?
Yeah, before he had his solo career, before he performed with the Faces.
Don't you love how those guys back then, they just kind of moved around band to band?
Absolutely. I mean, let's not forget, you talk about Clapton. I mean, in the Yardbirds, you had at one point or another Jeff Beck, Eric Clapton, and Jimmy Page.
I know. Like, think about that together.
Yeah, that's kind of mind-blowing. You know what else is kind of mind-blowing?
Your chart of the day?
Chart. Absolutely.
Okay, what do you got?
I took a look at 20 retailers that had reported third-quarter results, and all but one of them managed to beat analyst average estimate in the Bloomberg survey for earnings. I mean, Lowe's was the single exception. Everybody else ahead of projections. Do you think they got rewarded for it? Well, the fact that I picked a song called Going Down ought to tell you the short answer is no.
Yeah, not so much.
Most of the stocks dropped on the first trading day after their earnings reports came out. I was looking at L Brands, which really took off yesterday, almost 18% after their results. But that was so obvious as an exception that, if you looked at these 20 stocks that I picked, and they're mostly S&P 500 retailers with some exceptions. But in any case, for the group, the median decline was 1.7%, and in fact, 14 out of the 20 fell. So it just goes to show you that what we've seen throughout this third quarter earnings season, companies beating estimates and then not getting rewarded for it, has, if anything, been magnified in the past couple of weeks, especially with the retail results that have come out, and we still have a few more of those to go next week. So it's definitely something to consider here.
Did you? Oh, go ahead, please finish.
No, I was just going to say, if you want to know more, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
I was just looking at the S&P Super Composite Retail Index. It is up 39% this year.
Which is saying something.
Yeah, exactly. But I think it's, depending on the retail. We talked about Macy's with Poonam Goyal this week. I mean, it just depends. Some retailers have figured out how to quickly pivot to more digital and get it out there. But, I mean, it's not been the same case for everyone.
Bear in mind, though, 56% of the index in terms of weighting is
what?
Amazon.com.
Okay, there is that perspective. All right, Dave Wilson, so appreciate that. We'll get back to Dave a little bit later on with his stock of the day. Right now, though, we've got to do world and national news. Let's bring in Mark Mills. Hi, Mark.
Hello, Carol. Pfizer has filed with U.S. regulators for an emergency use authorization for its COVID-19 vaccine, seeking clearance for an experimental shot that's expected to play a critical role in fighting the virus. We get more on this from Bloomberg's Amy Morris.
A key step is a meeting of outside Food and Drug Administration advisors. Sources tell Bloomberg they're set to confer on December 8th, 9th, and 10th. Until then, the FDA will sort through the trial data. To boost consumer confidence in the vaccine, the FDA will post documents related to its review of any vaccine that's granted emergency authorization. That authorization means the FDA can skip steps like checking samples of the product or inspecting the manufacturing plant. In Washington, I'm Amy Morris, Bloomberg Radio.
Georgia election officials prematurely released a statement saying the state had certified its presidential vote in favor of Joe Biden. The Secretary of State's office then issued a corrected statement saying the results would come out later today, with Biden the winner of Georgia's 16 electoral votes. Secretary of State Brad Raffensperger says that while he is a Trump Republican, the election numbers are paramount.
Working as an engineer throughout my life, I live by the motto that numbers don't lie. As Secretary of State, I believe that the numbers that we have presented today are correct.
The Trump administration issued regulations today that could lower the prices Americans pay for many prescription drugs. The pharmaceutical industry is expected to make a legal challenge to the proposed rules. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
All right, Mark Mills, thank you so much for that update. You are listening to Bloomberg Business Week. Carol Masser, Charlie Pellet joining me as well. And Dave Wilson just mentioned Amazon, right? So when you look at the S&P 500 Super Composite Retailing Index, you do have to remember that it is skewed heavily towards Amazon whenever you look at the gains in that index. Amazon, though, up 68% this year, but they are doing, it seems like maybe a nice thing when it comes to some of those smaller retails, at least in France.
Yeah, exactly. And in a way, it comes down to quel dommage and qu'est-ce qu'on va faire, because they have agreed to postpone
my God,
Black
you are
Friday.
just a Renaissance man, are you not?
No,
go ahead,
absolutely not. Listen, I drink beer, live in Brooklyn, and proud of it. But here's what's going on. But maybe a Cabernet on Fridays, and Pinot Noir too. Here's what's going on, though. We've got Amazon agreeing to postpone Black Friday because of an outcry from smaller retailers. Amazon, traditional retailers, including Galerie Lafayette department stores, postponing the shopping holiday from November 27th to December 4th. All non-essential stores in France have been shut since October 30th, when authorities imposed new restrictions to contain the spread of the virus. The lockdown set to end on December 1st.
Listen, this is really nice. Listen, you think about it. Anybody who's got a digital platform a la Amazon, which has a huge one, as we all know, we've all been ordering through the pandemic. What's interesting is those traditional retailers, those smaller retailers who maybe didn't have such a significant digital platform, they're just not set up to do it, they're just waiting for the stores to open up and hopefully take advantage of shoppers coming to shop in their stores. And there's still some kind of, whether or not we're going to see that, whether or not those non-essential stores can reopen before the end of November. The French finance minister is set to make kind of a decision. I think it's supposed to come down today or very soon. But, Charlie, it's been tough for them. And so it's giving them an opportunity,
indeed.
Hopefully.
And in France, you've got President Emmanuel Macron set to address the nation on Tuesday. And he'll be laying out how France can progressively exit the lockdown and get all sectors of the economy working again. So stay tuned for that on Tuesday.
Hey, think about a nice coteron for Friday. I'm just going to tell you.
I'm down with that, Carol Masser.
All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We are well off session lows with the Dow, the S&P, Nasdaq still on the minus side, but we are seeing an advance right now with 13 minutes to go ahead of the closing bell. Stocks extending a weekly decline as traders weigh that conflict between the White House and the Fed over emergency lending programs, along with assurances that the government has plenty of room to help the economy. Here's where we stand. S&P now down by 8. That is a drop of 0.2%. The Dow has slumped 110 points, down 0.4%, while Nasdaq is lower by 4, down by less than 0.1%. The Nasdaq 100 index down now by 0.2%. 10-year yield 0.82%. Gold up 0.4, 18.73 the ounce, and West Texas Intermediate crude up 1%, 42.15 a barrel. Again, recapping off session lows with the S&P down 10, a drop of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, we're just about 12 minutes away from wrapping up the trading week. Stocks bouncing around. We took a leg lower. Now we're bouncing off our lows. We're still a little bit lower on this Friday session. Let's do the drive to the close. And great to have back with us once again is Aaron Kennan, co-founder, chief executive officer at Clear Harbor Asset Management, roughly $800 million in assets under management. He joins us once again on the phone from Stamford. Hi, Aaron. How's it going?
Great to join you, Carol.
What's the week been like?
Well, it's interesting. If you look at top line indices, not much has happened, but certainly we've seen massive news flow on the vaccine front, on the geopolitical front, on the economic front, and even the sector rotation that has occurred within the market has been somewhat significant, with most sectors that have been underperforming year to date really outperforming somewhat dramatically this week, and frankly even month to date. So it's certainly been an interesting week.
So like value and small caps?
Small caps, value, but at a sector level, for example, as you know, technology has been the great outperformer this year, along with consumer discretionary and communications. And on a month-to-date basis, energy, financials, industrials, all the laggards on the year have really had a massive move. Energy's up almost 18%. I think financials are up almost 13%.
Yeah.
Materials are up 10%. So we're starting to see some of that rotation. The broadening of the market is certainly somewhat welcome here.
I was just going to say, though, and it's also welcome in terms of if you're looking at it as a technician or from a fundamental perspective, that's what you want to see, right? The market widening out in terms of the gains.
That's right. I mean, I think that's absolutely right, and we're seeing it. And the question is it sustainable?
Is it real?
Is it real? I think part of the lead to this broadening is the growth that we've seen in China, which is now a massive allocation to the emerging markets index. China tends to lead the global growth story. And then, of course, the positive COVID news. And it's just wonderful news on the health front, but also on the economic front. It gives us some window into when we should expect to see GDP growth accelerate again. And I think the distribution of that vaccine from Pfizer, AstraZeneca, and Moderna, I think you're going to have the CEO on shortly, the timing of that distribution, the size of the distribution over the course of any given week or month will be key to how consumers react to that and to the economy, and how their consumption patterns evolve into 2021. So that's key.
So what's on the mind of the investors, your investors specifically? I know that there was a study of some institutional investors. I had another market guest on recently this week who did a call with money managers, and he said they were just so optimistic that it made me nervous. So I do wonder what you're hearing. Are people more cautious? Are people more optimistic? Do they feel like we have more visibility into 2021? What are you hearing? Is there kind of a theme there, Aaron?
Yeah, I mean, I think that a lot of the institutional side of the market is more bullish now than they have been in quite some time. I think Bank of America came out with a report earlier in the week that spoke to that. I would say at the high net worth level, at the individual and family level, there's still a lot of sort of disbelief that we sit here today and equity markets, both home and abroad, are for the most part up. Now, they've been led, of course, by the mega cap technology names, and so it has not been a broad-based rally, but nonetheless, the indices are higher on the year, and I think it's becoming a little bit of a show-me story. I would also say, because this is an unprecedented year, in not only in that we have an election, but we have this sort of friction around the transition of power after the election. There's certainly some clients that are more concerned than perhaps the market seems to be about how that's going to play out.
All right, so it's interesting too. I'm just looking at some of the stories that I was kind of reading in this morning, and one is from one individual, one investor who spent 14 years at the head of, let me just see, the OECD. Forgive me, I just couldn't read it. And he said, if you could see my desk right now at home, it's a mess. But he talked about the global economy could be facing a make or break moment in the COVID-19 pandemic as government's ability to cover the mounting costs nears its limits. We are, safe to say, Aaron, at this interesting point where we've gotten some aid, but we're now in second, third waves globally when it comes to the virus. And I do feel like there is that disconnect between what you're seeing in Wall Street and then what you're seeing by many Americans, by many small businesses. And so I do wonder, that make or break moment, will it be a good one ultimately, or will it be a bad one?
Well, that's a great question. I think in the short term, the stimulus will most likely continue. We'll debate about the timing of that, but we've seen the monetary side. The spigot's been open. We've increased our balance sheet at the Fed by $3.5 trillion this year. But to the point of that individual that you just referenced, certainly the long-term concern that we have here at Clear Harbor, that I have personally, is the degree to which debt to GDP levels, both at the public sector here in the United States and around the world, as well as even at the corporate level, are going to start to represent headwinds to long-term growth. And what will trend growth look like 10 years forward rather than 10 years past? And I think it's a real concern in the midst of this moment. Sure, we needed to spend capital and we needed the Fed to put their foot on the gas pedal to overcome the COVID virus, but what are the long-term consequences to that?
Well, as someone who runs a business, right, you're watching the markets, you're investing, you have clients, you have employees, you run a business. I mean, are you more on the cautious side and want to conserve capital at this point? Or are you thinking, okay, wait a minute, I'm starting to get a feel of what 2021 is like, and I can start to think about some of my strategic measures that I want to implement?
Right. I mean, I think you always need to have a plan and you need to have a process in any business, and you need to manage your growth. Growth.
But you know what I'm saying. Like, do you feel confident enough to say, you know what, we've been thinking about doing this. We were going to do it pre-COVID. We put it on hold. Now we're going to do it.
Right. I do think 2021 is still a year in that regard of a question mark. The timing of the trajectory of growth, the degree to which the transition is a success, who wins the Georgia race, will this impact taxes and regulation? I have views on all of these things, but I think that there's a significant tail risk around some of these questions, and certainly I think they're impacting capital expenditures, and you're seeing that. Capital outlays have remained depressed, not just this month and due to the election, but frankly for a long time now.
Yeah, it's been kind of, I feel like, an old story, right? But it's just pretty amazing that in terms of capital expenditures, companies continue to rein it in. Hey, Aaron, thank you so much. Have a great weekend. Aaron Kennan, co-founder, chief executive officer at Clear Harbor Asset Management, roughly $800 million in assets under management, with us once again from Stamford, Connecticut. All right, folks, just about 3.5 minutes left in today's trading session. We're going to count you down to the closing bell right here on Bloomberg.